Good morning, everybody. Welcome back to another episode of The Market Open. We are live on this Monday morning, February 9th. We are starting off the second week of trading for the stock market in February. Thank you, everybody, for being here. We've got a pretty big week. We've got a pretty big week across the board. We are going to have a massive week for earnings. A lot of companies that, although they're not big tech, there are companies that a lot of people here care about. We've got Robinhood tomorrow. We've got Spotify, Shopify, Grab, McDonald's, AppLovin, Coinbase, DraftKings, tons of different companies that are going to have earnings this week that we'll be getting into. CPI is going to be this week. That's also going to be very, very important. We've got a lot of macro data. We are also getting jobs data. The jobs data that we didn't get last week, the non-farm payrolls, I believe we're getting that on Wednesday, same day as CPI. So we're going to have jobs data, which is really important. Last week, we got some jobs data that wasn't really the best in terms of the layoffs for January, along with CPI that'll be happening this weekend. All those earnings are going to be very important. And then on top of that, you've got a week where we are now trying to recover. This is the first week after this is the first week after, I guess you could call last week the temper tantrum of the markets. We fell all the way down to 671 at one point last week on the S&P 500. Bitcoin hit $60,000 on the dot. I mean, it was an incredible week. It was an emotional week. But on Friday, we had a 2% rally, which was quite incredible. We ended out the day at 690. We're slightly red in the pre-markets, and we were green in the pre-markets. There's a couple of headlines that came out around China, which is why we ended up going red. So we'll talk about that. But in general, I mean, it was overall a pretty flat week, at least on the indices. Now, obviously, some individual stocks got hit pretty bad. And I think those are just creating some pretty decent opportunities if we are to recover. If we don't recover and we have a reversal again down 2%, 670.89 is what we hit on the S&P 500. That wouldn't be fun. That wouldn't be fun. CPI is Friday, not Wednesday. Okay, so we'll get the jobs report on Wednesday, then we'll have CPI on Friday. And hopefully it'll be a good week for macro data. But if we can pull through and, we're going to look at a lot of different theories and ideas that people have, but I do not think last week's 2% rally on the S&P was just retail. I think a decent chunk of it was retail, but I don't think retail pushed the S&P 500 up almost $1 trillion. Like, I really do think there was some big money that came in, although there's conflicting data that says big money ended up selling a lot during last week. So, I mean, we're going to find out when the market opens if we can start to get some recovery. But last week was a bloodbath that ended up recovering relatively flat across most indices. Now it's a question of if we can push forward from that on individual stocks. HIMS is down 22% in the pre-markets because of Novo suing them. This stock has been a disaster, but I kind of think it's close to bottoming. Like, I would imagine at this point being down from 60 to 18 that you're going to get at least somewhat of a even if it's a short-term bottom here. But this stock has been a disaster. I mean, corporate communication, management, CEO, it's just not been good. I mean, HIMS literally on Friday night decided they were going to take down their Wegovy copycat pill. Like, they launched it with this big hurrah, boom, we're launching this. And then I think 2 days later, they say, yeah, we've listened to the feedback. It was their official statement, and they're taking it down. It's not going to stop a lawsuit, apparently, as Novo gets ready to sue. Novo's actually up in the pre-market. HIMS is down in the pre-market. So not the best thing for HIMS, but when the market opens, we'll see how much the broader ecosystem of investors are willing to give him some flack. We also had the Super Bowl over the weekend. Honestly, I'm not going to lie. I fell asleep during the Super Bowl. I fell asleep at like 9:30 last night. I wanted to be interested in it, but I didn't put any money on it. So that was already intrinsically a reason why it was going to be hard to pay attention. And none of my favorite teams were in the Super Bowl. And then number two is just like, dude, it was too much of a defensive game. Like, it was defense versus defense. And it's like, okay, that's fine, but it's not fun. So yeah, it was kind of boring. But congrats to the Seahawks. I mean, I thought they would win. I was right. I think they were the better team, but their defense also was just like nasty. There was just no way Drake May was going to be able to get through that defense. I think he got tackled like sacked 4 or 5 times, which is kind of crazy in a Super Bowl. But this is only his second season, right? So I'm sure he'll be at the Super Bowl again in his career. It's just, yeah, Seahawks ended up ended up taking that win. The ads were interesting. Super Bowl is one of the times where 100 million people could actually watch an advertisement. That's why it costs so much money to get a 30-second slot. I thought the ads were kind of trash, to be honest. We actually had ChatGPT put out an ad for Codex. Coinbase's ad was just, I don't know, dude. Some people are saying it's genius. Some people are saying it's stupid. It was just like karaoke on the Las Vegas Sphere, and at the end, it showed the Coinbase logo. And I'm like, okay, I guess that's cool, but I don't know. There was a lot of Anthropic ads. The ads were kind of not that. There wasn't one ad that was like, oh my goodness, this stood out to me. So I don't know if the ads were amazing, but the game itself was kind of boring, and that's how we ended out the weekend. All right, so let's get into it. Again, thank you all for being here. Again, I think this week is going to be characterized by a recovery, hopefully, off of the lows that we had last week. If those were the lows, I'm hoping those are the lows. Bitcoin right here, 68.7. It was touching 72 last night. So you had Bitcoin get some momentum. Even Robinhood hit 87 last night. Robinhood hit 69 last week. Now it's at 84.93, up about 2.55%. I mean, a lot of these names, SoFi's up another 2.5%. IGV, software, we got some stats on that. We'll look at that's up 0.67%. CoreWeave's up. I mean, a lot of names should be up and hopefully do recover. When the market opens, we'll have a much better understanding of this. By the way, that company that put out that massive short report on AppLovin 2 weeks ago, they came out yesterday and they said we made some critical mistakes in our short report and we take back some of the things that we said. So for anyone who is short AppLovin based on that report, it worked out, but you might have a pretty heavy reversal. Potentially, it's still a SaaS name and SaaS is still getting punished as that short came out and said, yeah, we don't exactly stand by all the things that we said a couple weeks ago. So maybe that'll be a little bit of reversal on AppLovin as well. All right, so let's get into it and let's get started with a variety of different headlines. I think we'll start off, first of all, by Donnie T. This is what he said after the Dow Jones hit 50,000. He says, by the end of my term, which is 2028, I am predicting the Dow will hit 100,000. Now, I don't know if we're going to hit 100,000 on the Dow, but once again, I do think it is a bit hard to be super. Oh, yes, we have Amcor earnings after the bell today. So we have Amcor and On Semiconductor earnings after the bell. I'll see if Sam wants to get on with me today because I know On Semiconductor is a big name for him. Amcor, we're talking about that stock when it was 30, now it's at 45. So hopefully they put up some good results. If Trump does put up 100,000 Dow Jones, which is a doubling of the Dow in 4 years, I don't know if that's possible. I think that would be relatively aggressive. But if it, I mean, obviously anything is possible. If it does happen, you can't be that bearish on the stock market. You just can't be. So I thought that was relatively interesting that Trump was pretty excited about the Dow Jones hitting 50,000. The Dow is one of those indices that has been around since like the 1800s, or honestly, I think it's since like the late 1700s. It's the thing that people that are a bit older care about. Trump has obviously cared about that index for a long time. And if it were to get to 100 grand, I mean, NVIDIA is a big part of the Dow still. I would imagine the S&P probably pushes close to 10,000 by 2028 if that happens. I don't know if it'll happen. But if it does, once again, it's another reminder that the stock market is the president is on your side when it comes to the stock market. Google, this was the other big headline this morning, is raising about $15 billion in a multi-tranche bond sale, including long-dated piece out to 2066 that's being talked about, 1.2% over Treasury. So Google's raising a ton of money this morning. That's probably why their stock has been not necessarily getting hit, but it's not really been benefiting the most after those massive earnings where they grew cloud by 48%. We'll talk about big tech earnings in general. Google right there is down about 0.5% in the pre-markets. This is the exact same thing that Oracle did last week as well. And the reason this is very attractive to investors is because they're giving you 1.2% of a yield over treasuries, which treasuries are at 4.2%. So that is relatively compelling if you don't think Google's going to go out of business. And I think most investors think Google will be around for a long time, but they're dating these bonds to 2066. So, and some of them are actually bonds that are going out 100 years. So these are very long-term duration bonds. As you can see right here, they have 3-year, long 6-year, 15-year, 32-year, and then 100-year multi-tranche fixed rate senior unsecured benchmark transactions that can follow as early as tomorrow as they have officially registered for these bond sales. Look, at the end of the day, I think it's bullish because they need the money to be able to spend. Meta's doing somewhat of the same thing. Obviously, Oracle's doing somewhat of the same thing. And it gets into the broader question of what's going on with Capex and what's going on with big tech. And I thought this short kind of highlights exactly what's happening. As you can see right here, now that we have all the Capex numbers, and I think all those Capex numbers are relatively important to have a better understanding of what's going to happen with NVIDIA, what's going to happen with GDP growth, what's going to happen with overall job construction in the United States if we're spending $650 billion on Capex. But lo and behold, one of the stocks that got hit the hardest after earnings, Microsoft, is the only name that's going to have positive free cash flow. And again, this is not certain, but this is just based on the analyst expectations at the end of the year, based on the Capex that they're spending. Microsoft is one of the only ones. Amazon is going to be lucky if they get some positive free cash flow. Amazon basically told you, yeah, don't expect us to have a lot of free cash flow that is positive. But they also think that the opportunity is so massive right now that they need to invest, which again, I don't see how that becomes bearish. If these companies are like, hey, we have to spend this money because this money is going to lead to the next evolution of growth. Jassy basically said the next version of AWS is going to be rooted in the idea of us spending and investing as much money as we're spending, then obviously that's going to be something that they take advantage of. But it also means that part of the reason I think large cap tech has kind of been out of favor is because after dividends, buybacks, cash from operations, and then the Capex that they have to spend, there's not that much free cash flow left. And, you know, there's a popular saying that stock prices tend to follow free cash flow. And obviously it's not going to be that massive for some of the tech companies. You can take a look right there. Again, big tech Capex expected to exceed $650 billion. These guys are catering Capex at almost 30% year over year. Apple's the only one that's like not spending as aggressively. Tesla spending, but not as much as Meta, Microsoft, Amazon, and Google. And then NVIDIA, you know, they are the major beneficiaries of this Capex. So I don't see a world in which we get a unbelievable, horrific recession if the Capex numbers are being spent at the level that they're being spent at. That's going to prop up GDP. Remember, the big, beautiful bill also gives a lot of these tech companies the ability to depreciate a lot of their Capex and has a lot of other tax advantages that are bullish for them. So they're incentivized to spend this money. They're incentivized to invest. For the past 40 years, the United States has not really invested, right? Companies have not invested. They've been the beneficiaries of investments. Now they're starting to invest, which is a massive tailwind for GDP. But it also means that, I don't know if we have some crazy recession, if that happens. And if we don't have that crazy recession, then it would have to be for another reason. And, you know, maybe that reason's out there, but I don't think it's because of big tech. That also means I think NVIDIA is going to demolish earnings. By the way, rate cut probabilities after those nasty labor market numbers we got last week, almost 20% now. This was 10% 2 weeks ago. So March 18th will be the next potential rate cut. We're at 20%. I think NVIDIA is going to crush, whether you own NVIDIA or not. It's really important that they do crush. It's going to be hard to imagine the market says we're going to ignore what is probably going to be $70 billion of revenue with a 45 to 50% year-over-year guide for fiscal year 2026. Now, I think there's a world in which NVIDIA crushes, the market goes up, and then as soon as NVIDIA adds 10%, the market takes it down 10%. It's almost exactly what happened last November. I feel like that could definitely happen, but it wouldn't be justified, just like it wasn't justified then. And if you bought NVIDIA then, you would be up on those shares. And hopefully that happens this time as well. So yes, earnings that have crushed have been punished by the market. Pagaya, I don't know that much about this name, but this stock's down 21%. From my understanding, they had a pretty good earnings. Obviously, there's something I'm missing here for why the stock is getting hit 21%. They missed on revenue by 4%. So they missed by about $5 million on revenue. EPS, they beat by 4%. EPS is up 371% year over year. But once again, companies that are beating are getting punished. Monday.com. Let me know in the chat if anyone's used this before. I've seen their commercials all the time. This is another software company. It is a task management platform, kind of like Atlassian, if I'm not wrong. It's down 18% on a double beat. They beat by 13% on EPS, $1.04 versus 92 cents expected. Revenue, $333 versus $329, beat by 1%. I guess something around guidance on Pagaya or Monday might have been the issue, but these software names continue to be just in a league of their own in terms of getting hit. That's down 18%. It's a $5 billion company. I don't know if a double beat deserves to get hit by 18%. On Pagaya, there was low end of their guidance on revenue, and their guidance for fiscal year 2026 was too low as well. Pagaya, from my understanding, is a payments platform. So this is not necessarily SaaS, but yeah, if the guidance was the issue, then that could be creating the problem with Pagaya. Speaking of SaaS, let's get into that conversation. So let me know in the chat who is buying these SaaS names. IGV, the software ETF, had a massive level of call options bought on it over the past couple of days, and software continues to be decimated across the entire board. The broader question here is, will SaaS make its rebound? And based on what Jensen said over the weekend, based on what Sundar said on the earnings call, you got a lot of people that are just thinking SaaS is not necessarily dead, but you had some different perspectives. We actually had some billionaire beef over the weekend. So remember when Brad Gerstner said Google was dead, and he was just like, yeah, Google's never coming back. It's dead and it's going to be gone forever. And like ChatGPT is taking over. Well, over the weekend, he said the same thing about Salesforce in this whole SaaS sell-off. And he basically, CRM is never going to trade at 30 times free cash flow again. And then Mark Benioff, who is a petty, petty man. By the way, the Salesforce commercial I thought was not that interesting. They partnered with Mr. Beast. It's like $1 million giveaway. I don't know. I didn't think it was that good. But Mark Benioff then tweets a clip of Brad Gerstner talking shit about Google. Obviously, we've seen what Google's happened since that clip. Google has doubled literally since that moment. Mark Benioff is like, hey, Sundar for the win. Basically, I don't think he's in love with Sundar here. I think he's implying that this guy, who's the biggest tech analyst in the world, he's one of the most important ones, Brad Gerstner, said Google was dead. Google is not dead. And now he's saying Salesforce is dead. And I don't think Salesforce is going to be dead. Sundar even commented underneath it. And then Brad had to respond saying, hey, Sundar, you did a great job. At the time, I thought it wasn't blah, blah, blah. So now he's saying the same thing about software. And I wonder if the same thing's going to happen, where Gerstner was super bearish Google because of AI. Google ended up winning. Now he's super bearish software. Not bearish, but not the biggest fan of these software multiples. And I wonder if the same thing's going to happen, where people just wake up and say, why are we selling off some of these tools? Here's what he said over the weekend on the All In podcast.
Point that David Sachs just made, which is the profit pools in the future, right? It's not that the idea that software is dead is ridiculous, right? Nobody's, intelligently, I think, making that argument. But the argument they are making, which is causing radical devaluation of these companies, is that the profit pool available to software is decreasing and the profit pool available to the agentic layer is increasing. And when that happens, the discount rate, that terminal value of those software companies plummets. And so you can have things that are true. It could be true that you're not going to replace CRM, but it can also be true that it's never going to trade at 30 times free cash flow again. And it's going to trade 17 times free cash flow because its available TAM in the future is now dramatically and permanently changed. Now, what could change that? There's only one thing that could change that. They have to accelerate their revenue growth in their core business and prove that they are AI beneficiaries, right? And they're not going to get eaten away by AI. And I'll tell you a company that is doing this, Databricks. Databricks just re-accelerated the last 3 quarters. They're growing over 60% at scale. Snowflake re-accelerating. ClickHouse re-accelerating. There are beneficiaries in the software space.
Is that because of AI tools that they're adding?
Because it's all these AI tools rely on data and data transformation. And for all...
I don't think he's necessarily wrong on that. I mean, if these companies are going to be able to reaccelerate revenue, the reason they're going to reaccelerate is because of AI tools being a catalyst, just like Gemini was a catalyst for Google, which at the time, I think Google had Bard. Like Gemini wasn't even a thing at the time. But that's the question. Do you think that Salesforce and these companies can get those multiples that they were trading at over the past 6 years? Again, relatively to the S&P 500, all the gains over the past 6 years have been wiped out for software names outside of certain companies like a Palantir. Do those companies get that type of bolt of momentum again? And quite frankly, if they show the growth, I think they will, because then the market's going to say, okay, we were wrong about this. But, Salesforce is not really showing that crazy growth anymore. And so does it really deserve 30 times free cash flow the way it was before? And, whether or not you hate Palantir's valuation, they really are showing massive growth, 70% last quarter, guiding for 60%. They're going to do 75% in Q1. All those numbers, by the way, are relatively conservative. They sandbag at least by a couple of percentage points every time. So you're just going to see more inflecting growth, which is why the street's probably going to continue giving it a premium. A lot of these other names aren't doing that. And now I still think even without that growth, ServiceNow does not deserve to be at $100. but time will tell to see if that AI can be a tailwind for their growth. By the way, Dan Ives has upgraded ServiceNow and Salesforce to the Ives AI 30. And this morning he came out and said, it is ridiculous that these names are trading at these levels. And we are officially saying that they should be part of the AI software stack that is going to win over the next 10 years. What does sandbag mean? Sandbag basically means that you're trying to show that your numbers are much lower than what they're going to be, right? You're trying to lower the expectations so you can out deliver. A lot of companies tend to do this. SoFi is actually really good at doing this. Palantir doesn't really sandbag aggressively, but they definitely don't guide as high as they could guide. I mean, most companies don't want to guide as high as they can, right? Because Wall Street's all about perception versus reality. So in the context of a lot of these software names, that are actually growing, if they can grow even more than what the street's expecting them to grow, and they have a history of doing that, that's where they win. Dan Ives says we are adding Salesforce and ServiceNow to the Ives AI 30 list after taking them off in early December with the software Armageddon sell-off over the last few weeks, assuming software tech behemoths like Salesforce and ServiceNow are structurally broken, and we strongly disagree. AMD gets punished for sandbagging all the time. Okay, that's fair. Some companies do get punished for doing that shit. AMD is one of them. I did buy AMD on Friday. I do think it's kind of stupid that it fell from 255 to 200. It's at 208 right now. So, I mean, look, at the end of the day, I don't think these names necessarily deserve to get hit. AMD is going to benefit so much from this Capex. Just from Meta alone, it's going to benefit. So, and Meta is another name I bought on Friday. We'll talk about Meta in a second. Amazon I also bought. I just think a lot of these names, yeah, they could go lower, but they've also, a lot of these names are down 30, 40%. The Max 7s are down like 10 to 15%. So, I mean, if you're going to take a bite at some of these names, I feel like it's not crazy to take a bite right now. Could we go lower? Of course, but the beneficiaries are these companies from all this Capex, or they're doing the Capex, which is going to help them grow long-term as well. Farzad, thanks for the super chat. Proud of you, Mitt. You're crushing it. Congrats on all your success. Everyone's super chat now. Farzad, appreciate you, man. Thank you for being here. Speaking of Farzad, he reminds me of Tesla every time I see his name. Tessie, down right there in the pre-markets. Let's transition to Tesla because we've got some interesting thoughts from Elon over the weekend. But to finish up the conversation on Capex, Capex is strong. It's not slowing down. The big tech companies are spending money. Although Brad Gerstner is bearish on software, this might be the time where software starts to show more AI momentum and growth. I do think Gerstner is right, though. Unless they show that growth, like the big tech companies are showing the growth on Capex, then you're not really going to see the market reward them. I mean, maybe the market says, all right, enough is enough. Their RSIs are too oversold. We're going to give them some momentum and call buyers come in, et cetera. But I do think they've got to show the growth. Just like Google eventually showed the growth, and that was enough to create a lot more excitement. So what did Elon say over the weekend? This was a big pivot, actually. And I mean, will it affect Tesla? Potentially. Definitely will affect SpaceX. So here's what he says. For those unaware, SpaceX has already shifted focus to building a self-growing city on the moon, as we can potentially achieve that in less than 10 years, whereas Mars would take 20 plus years. The mission of SpaceX remains the same: extend consciousness and life as we know it to the stars. It is only possible to travel to Mars, where the planets align every 26 months, whereas we can launch to the moon every 10 days. This means we can iterate much faster to complete a moon city than a Mars city. That said, SpaceX will also strive to build a Mars city and begin doing so in about 5 to 7 years. But the overriding priority is securing the future of civilization, and the moon is faster. So essentially, you've got Elon making the argument that we are pivoting from this idea that he's been pitching for a while, which has been to go to Mars, and basically saying, yeah, we still care about Mars. And if you kept up with Elon, he's been talking about Mars diligently over the past 10 years now, and he's pivoting that to the moon. And I think the reason for this once again goes down to the SpaceX IPO, because if Elon can paint a picture of data centers in space and a city on the moon, and SpaceX has all these different launches they can do onto the moon, they have all this demand from all these customers to put stuff on the moon, potentially put data centers on the moon, whatever it may look like, then that's a much more compelling argument to justify the IPO, which is going to be the largest IPO in history at 1.25 trillion, over looking at the actual numbers, because the numbers on SpaceX are not like the most attractive in the world. So I think this makes sense. Is it a pivot by Elon? Absolutely. Is it a pivot that was something people probably saw coming? Yeah, because again, Mars is if anyone's going to get to Mars, it's going to be Elon, but it's also not easy to get to Mars. In the short term, I think investors buying into an IPO with this fantasy of going to Mars one day is not as easy as like actually showing that they have launches to the moon that they've been doing many times over the past 5 years, and that they'll have a lot more demand to continue going to the moon. And if they can build this type of moon city that Elon's talking about, that would also probably be very beneficial to the broader ecosystem of purchase orders that SpaceX gets. So, I mean, this makes sense. At the end of the day, it's a better way to justify the IPO. But yeah, the moon continues to be what Elon is now focusing on. So I think he's getting ready for this IPO. I think he is trying to pump this stock for the IPO, get people excited about it. Will we have this Tesla merger? I don't know. You still have a lot of people speculating on that. We obviously have had the XAI merger. Now, again, remember the XAI merger. I mean, XAI was losing a lot of money, guys. XAI was losing a lot of money. It was estimating they were losing like $1 billion a month. And it makes sense. They're not as big as Gemini. They're not as important as Anthropic in the enterprise. They're definitely not as big as ChatGPT. Like, I mean, there's no ads in Grok. So it was hard to imagine that Grok was making a ton of money. It makes sense that SpaceX was going to eventually just put them inside of the same company. I don't know if it adds that much value to SpaceX monetarily. Obviously, from a technological perspective, it values it pretty well. But, would someone pay $250 billion for X as a private company if they saw the financials? I don't know, because the financials are probably not that best, especially given how much money they're losing. But you put that together with SpaceX, and then you paint this broader story about data centers in space, et cetera. That's what's going to get the IPO to be super excited. For those asking about HIMS, again, Novo is suing them, 23% down. I wonder if this stock will bottom here. I really do. This was basically at this level about 1.5 years ago when people started getting excited about this name. And I think it is at least a lesson so far on trying to invest in a company with a moat. The biggest critique of HIMS has been that there is no moat. And based on the fact that they had to take down their Wegovy copycat pill, kind of shows to me that the moat is decreasing quickly. And it's weird, but you are seeing that with HIMS. Again, they're being sued by Novo, and Novo is asking the court to permanently ban HIMS from selling compounded version of its drugs. The move is escalating the feud between Novo and HIMS. Novo estimated in January that as many as 1.5 million people are using compounded GLP-1 drugs. That would not be the best for HIMS if they would officially be forced to stop selling these compounded drugs. Now, GLP-1 is not the only story with HIMS. The stock's trading at a 2.3 times price to sales. Is probably going to open even lower than 2.3 times. If the company really pivots off of just GLP, then maybe there's a chance that they can justify the low sales multiple with the high growth that they're putting up, because they are still a high growth company, even if their margins aren't amazing. But that would be a pivot for them because they kind of went all in on GLP. Sachin says, whether it bottoms here or not is not an issue as long as the lawsuit hangs on them. There's always a risk of heavy fines and stock will be range bound for a long time despite the earnings. Yeah, I think that's also fair. I mean, this is what we saw with Google for a long time, right? I mean, they were putting up phenomenal earnings, but that lawsuit around the DOJ potentially breaking them up literally made the stock stuck from 140 to 160 for almost 8 months before it broke out. So I think the broader question that, and people have asked, should I just take the loss on HIMS? I mean, sometimes it's okay to take the L. I would want to see a little bit of price action before exiting the position if you still have a position in this, because maybe there's a world in which buyers come in and give this some reprieve. But there are plenty of opportunities that have been sold off pretty aggressively. And as much as it might hurt to take the L, there's other stuff that might recover in the short term. But HIMS right there, 1782, that is down 22%. Also, they have earnings in a week. And so maybe you kind of just let the earnings change. The thesis has changed with HIMS. Well, Nate, who's a good friend of mine, Nate was big on HIMS. He sold HIMS last week as well. And for him, the entire thesis changed as they focus way too much on compounded GLP drugs. Like, he bought it for the Netflix of healthcare, and he, thinks the company is kind of losing that entire approach to how they're dealing with the sort of trajectory of what they're building. And as a result, he took a loss. And sometimes when the thesis changes, that's okay. It's okay to sell the name. SoFi right there, that's up 2.35%. Bitcoin at 68.4. Broadcom's down about 1%. Micron's down 3%. This headline on Micron's also not the best. Micron's trading lower after Korean news reported that Samsung plans to start mass production of HBM4 as early as this month for NVIDIA's next-gen AI platform, Vera Rubin. The report says Samsung has cleared NVIDIA qualification and secured orders, while Micron is guided to ramp up HBM4 in Q2 of 2026. There's two things that's causing a worry for. Number one is that there might be a lot more supply than expected for HBM, high bandwidth memory, which is, the entire reason these memory stocks are pumping is because there's a demand supply shortage in regards to memory. And then number two, if other competitors are able to ramp up production on a commodity, which is memory, Micron's margins might take a little bit of a beating into the next coming quarters. Now, is that a death note for Micron? I don't think so, but that's definitely something where you could put some pressure on the stock. And you're seeing some pressure right there on Micron as that's down 3.4%. SanDisk, is that down as well? SanDisk, yeah, also down about 1%. SanDisk went from 750 to 580 to 625 to 545, back up to 670, now back to 592. So the volatility of these memory names has been pretty strong as they continue to get bid up, but also, try to justify the bid that they're having right now. Hasset, let's go to him. Let's see what he's saying about this economy. And then we will keep going from there.
Said whose economies whose economy is the policy being driven right now? Who's going to manage the policy going forward? Who's going to give you the State of the Union in a few weeks that says here's what's going to happen over the next few months and years? And for that, it's definitely Trump's economy.
Kevin, one of the things that we haven't talked about since I don't think we've seen you since Kevin Warsh was
Davos
announced.
is the last time we
Right. So, but now, so now Kevin Warsh is going to have the job. Obviously, has to get through the confirmation process. But one of the arguments he's made quite publicly is actually that because of AI and the idea of productivity, that there's an opportunity to lower interest rates, and that you can do that without increasing inflation. At the same time, there's now this new question about what's happening with employment in the country. And I'm curious how you think about squaring those two circles, if you will.
Right. I mean, there's absolutely no question that we're in the biggest productivity boom that we've seen since the 90s, that the introduction of the internet and the introduction of artificial intelligence are very similar in the ways that they're affecting the data. I thought it was interesting. You put up a graphic a minute ago where you showed that the biggest outperformer of the Dow was Caterpillar, of all things. But that's 100% consistent with what we're seeing, which is that, first of all, that Trump's tax policies are making it so that you can expense capital equipment. So there's big demand for Caterpillar stuff. But then also AI is making it so that every company from Caterpillar on up is finding that it's more productive when it does stuff. And so with higher productivity, they get higher profits, and profits is, we often hear from another network, it's a mother's milk of stocks. And so, yeah, I absolutely believe that we're on an uptick that's significant. I think that the open question really is what's going to happen to jobs as productivity goes up? And I think that there's a chance that job creation lags, productivity skyrockets, profits skyrocket, GDP skyrocket. But then all of a sudden, like, you're making 20 widgets and you can make 20 widgets with a fewer person, and then that person has to find a new job. I think that kind of transition could happen.
When you think about.
So Hasset continues to defend the broader economy in regards to GDP growth. And, the jobs report was not productive last week. We had the most layoffs we've had since 2009 in January. Now, the administration is saying, well, that's due to the seasonality of Amazon workers, UPS workers, et cetera. And as a result, that's, why the January jobs report wasn't the best. The next jobs report is going to be really important, because of that jobs report, Bitcoin right here getting hit down about 3.5% is also not good. You can't just blame seasonality. And so maybe seasonality is one of the arguments you can call for in January, as some of the holiday workers got laid off. But if that continues, which is, part of the reason why the rate cut probabilities are higher as well, then that probably is creating some more issues in regards to the overall job ecosystem. Sydney Sweeney is ringing the bell today. Is she at the New York Stock Exchange? Yeah, she is. Huh. Okay. I guess Sydney Sweeney and I will be doing the same thing today. We'll be ringing the bell. Is she there with American Eagle? She might be there with American Eagle, because she is an ambassador for that company. All right. SoFi. So shout out to Tanner and Tevis. They got the exclusive with Noto over the weekend. I'm going to link their podcast. If you haven't seen it, please make sure to watch it. Noto, from my perspective, is a little mad that the stock is down. And I have never seen him this unhinged on a podcast ever. I'm so happy he got to be like this with Tanner and Tevis, with two retail investors. But they straight up asked him, would you buy the stock right here? And here's what he said.
You were a buyer of the stock. We just recently saw that one of your executives made an insider purchase on open markets. Is there a possibility that even you are potentially looking at this stock as being undervalued and potentially looking to double down on your conviction?
Yeah, I think, as I mentioned, I think that the stock's undervalued, and I would be buying it here. This is publicly available. I did a prepaid forward, variable forward. I can't remember the exact time period, but I really can't buy or sell the stock without significant tax implications until March 1st. I think that's the time period. So, if March 1st was last week, I would have been buying the stock. Now, that doesn't mean when March 1st gets here, I'd buy the stock, because there are always factors that can cause me not to be able to buy the stock. If we're looking at an acquisition, even if it's not going to happen, it's like we're seriously considering an acquisition, I'm not going to go buy the stock. Like, I don't want to. There's a saying that says when you skate on a pond, you guys are from Canada, it's cold, I'm sure you've skated on ponds, you don't want to skate on the edges of the pond in the spring. Why? The ice is melting, it's softer, and you could fall in. I always want to be in the middle of the pond when it comes to things like buying the stock.
So I thought that was pretty incredible for Noto to say, yes, I would be buying the stock. But then he went to town on the analysts, and he was like, these guys don't know how to actually value a company.
3 different perspectives, and it's a great prism to be able to look through. And I don't want to, criticize any one party. Everyone has their views. My guess is their views are ethically driven. My guess is their views are very thoughtful, but they're just wrong often, and many times misguided. There's opinions, but there's things that people talk about as if it's fact. And so, this whole dilution on the equity offerings, I'm reading it, and it's, driving me nuts. And I'm like, well, can I publish something? And then this is, not just this last couple of weeks, but all the way back in the fall. And, it's not great for a CEO to be publishing their point of view. And investor relations, that's their job, is to communicate on behalf of the company's points of view holistically, not just mine, but Chris's, our boards, our employees, and the realities. And so we will start providing perspectives the best we can. We want to be as transparent as we can. We can't.
This made me so bullish. This made me literally, he's saying we will start publishing our own perspective of how we think our stock should be valued, because we think the analysts are so dead wrong on this. And, usually companies, they don't necessarily do that to the extent that Noto is talking about. They'll have industry conferences. They'll talk with they'll invite the research analysts over and try to spend a day with them to get them to see their point of view. But also a lot of stocks are not absolutely ignored the way that SoFi has been ignored for the growth rates that they've been putting up. Again, a lot of people try to value it with tangible book value, but they're growing at 40%. So, just because they're a bank, do you really value it at that level? And Noto's literally saying, hey, we are getting so pissed off at this point that the analysts are so unbelievably wrong on how they're thinking of our business that we're going to put out our own perspectives on our stock, because we have the right to do so, and we have the right to communicate that to the broader market. I think that's a certain fire that Noto is showing around the anger that the stock is not. He's fighting for shareholders right here. Now he's also fighting to get that stock above $35, because he's going to make a lot of money if it holds that level for 60 days. But I think he also realizes that their growth is not being appreciated in the public markets. For the stock to be at $20, for the stock to have gone to 18 after the quarter they just put up, was pretty incredible. So I thought it was a new fiery Noto. I've never seen him talk as explicitly as he did about the stock. And I think that's bullish. I think that's super bullish. So it'll be nice to see if that continues to maintain momentum. By the way, Japan hit an all-time high yesterday. The Nikkei is up 4%. Why did that happen? Well, the Japanese prime minister, who is pro money printing, got an overwhelming amount of the votes. Trump did endorse her. And the Japanese bond yields also rose to their highest levels, because people realized, all right, if the money printer's on, we're not going to be buying these bonds. And so bonds got sold off, but the stock market went up. So I think that could be a macro catalyst for the broader U.S. equity markets today, given that Japan went as high as it did. Now, one of the reasons why the U.S. equity markets are red in the pre-market, again, they were super green until around 5:30 a.m. And What happened at 5:30 a.m.? Well, Bloomberg reported that Chinese regulators have told financial institutions to rein in U.S. Treasury exposure, urging some to curb their purchases and others with bigger positions to trim, citing volatility concerns. So early this morning, Bloomberg reported that China basically told a lot of banks to start selling U.S. Treasuries, not in a like meaningful way, but just to limit your exposure. And that led to a rise in bond yields in the United States. So even though the Japan tailwind of the Nikkei hitting all-time highs was affecting the futures last night, this China news kind of messed it up in the pre-markets. And I think that's why we ended up going a bit red. But we have Sydney Sweeney, who is ringing the bell with American Eagle. So that's pretty cool. That's wild, bro. Sydney Sweeney joins American Eagle executives to ring the opening bell. I get to ring the bell every morning, so it's cool for her to ring it. But yeah, I also get to ring the bell. That's crazy, dude. Sydney Sweeney. All right, so we got a minute until the market opens. Thank you all for being here. I am hoping we can start off with a green start to the week. Last week was ugly. We recovered on Friday a little bit on the index. I mean, we recovered entirely on the index, but individual names have obviously been hit pretty badly across the board. And so it's time for some recovery. Oh, yeah, the green or red poll. Let me do that real quick. I don't know, though, because what would hurt the markets a lot, or I just think confidence, is if we go right back to being bloody red, which I don't think has to happen as aggressively as some people think could take place. But if it does, it's going to be a whipsaw for all investors, institutional and retail, and that's not going to be fun. And so we're going to find out today in the next 20 seconds how we open up, and then hopefully we can get a trend that keeps us to the upside. All right, here we go. Thank you, everybody, for being here. It is Monday, February 9th, 9:30 a.m. The stock market is now open. All right, wake your asses up. Let's get into it. NVIDIA opens red on the day. 184.07. This stock went from 171 to 187 last week. Let's see if it can get some momentum back into the high 180s, 184.73. We are red across the board, folks. S&P, red. Robinhood, slightly green, but there is a red candle right there. Google loses 1%. They are offering 15 billion of bonds. That's red. Micron, 5% down off that Samsung news. Then more memory might be entering into the supply of memory in general, which is not the best for some of these memory names. Monday.com, 24% on a Monday, too. That's just disrespectful from the stock market. Salesforce down 2%. ServiceNow down 1%. AMD down 1%. Tesla down 0.5%. HIMS down 22%. SanDisk down 3%. SoFi somehow holding a little bit of green, $20.93. AppLovin, that's up, but it's down from where it was in the pre-market. Meta, that's up by like 2 cents. Gold and silver are slightly green. IWM is down. Ondas is slightly green. Reddit down 1.3. This one's looking a little bit more interesting to me, but I'm also trying to wonder why exactly the street took it down after a really good earnings. That's not really the most bullish to see the street take it down that much after a pretty strong earnings. Amcor is down 2%. Shopify is down 0.5%. ASTS is down 1%. Microsoft barely holding green. Palantir loses its entire pre-market pump from 139 to 135. Rocket Lab 72. Iran down 0.33%. Amazon down 2.3. MicroStrategy down 5. I mean, it's red across the board. I wonder if it's like real red or fake red. The software names, once again, Salesforce and ServiceNow. I think this is a new low for ServiceNow, 98 as it got hit. Zeta, unfortunately, this name is a freaking software name. Although, I mean, again, the growth rates on a lot of these companies do not justify being at these levels, but all of SaaS will be commoditized, I guess, and that's the issue. Robinhood holding on to some green, which is nice, even though Bitcoin's down today. So the fact that Robinhood is holding up is nice to see. Bitcoin down about 3% right here on the day. NVIDIA, did we go green? NVIDIA, yep, we went green on NVIDIA. Okay, so some of the semis coming together. AMD trying to go green. That one's still down. How about Broadcom? Broadcom is also green. Broadcom and NVIDIA maybe leading the way. The other semis might be just lagging behind, but they might be coming through. D-Wave's down 2, Rigetti's down 2, T1 Energy, Solar Name, that's down 3. Enphase, I don't think is at $50 anymore. Enphase, nope, it's at $50. It was at 47 on the weekend, 50.78. That's up 1.32%. Oracle did get an upgrade today by D.A. Davidson. Oracle back above 150. That's up 5%. That should be good for the data center names. Iren, basically flat. Nebius is also flat. And then CoreWeave is also flat. CoreWeave is actually up 3%. All the data center names, by the way, on Friday, massive day. Nebius, I think, was up 10%. Iren was down 30% on earnings, then it went up 7%. So plenty of volatility and momentum on those names. NVIDIA breaking through to 186. That's nice to see for NVIDIA. If that one can get back to 190, that would be very good for the overall semiconductor ecosystem. Robinhood holding on to its green. That's also really nice to see. Robinhood, I think, has taken enough of a beating. I don't know if it has to go back to $70 again. So if it can kind of even just chill out in this range, I would be content with that. Applied Digital, that's up 1.5%. Atlassian's getting hit by 4%. Same thing with Monday. Those are all getting hit. Palantir, did we go green? Wow, we went green on Palantir. Okay, so some of these names coming back. Once again, a volatile market, but some of these names not easily dealing with the sector red that they're in. Snapchat's red, Viavi's red, Fluence, this one got decimated. This thing was $33 last week. Now it's $18. That's down another 4% on the day. Netflix has not gone below 80 yet. Netflix has not gone below 80 yet, but Netflix right there, $80.80. Yes, we have Grab earnings on Wednesday. Grab is at 427. That's up 0.23%. They've got to put out some really good guidance to get this thing to go higher. So we will be covering that. I think their earnings are around 8 o'clock on Wednesday. It's going to be a little bit later in the day, but we'll be covering those earnings. JP Morgan, 322. That's flat. Lilly, 1100. That's up 5%. You're getting some momentum on Lilly. Hims is, yeah, I don't know what to say about this one, guys. This one's ugly. This one is just very, very ugly. This is one example of a stock that I didn't sell at the top, but I got it at 57, and I never looked back. What was the day? This was in the summer. This is the first thing I said when we started the market close that day. It was that day where it ramped up all the way to like 60 on some headline. And I was just like, I'm out. I don't even fully understand the business. My uncle as well. My uncle had 2,000 shares of Hims. He sold at 58 that day. And he was on vacation. He didn't even know what was happening. But I remember he texted me. He's like, why is it up? I was like, I don't know, but I'm selling. He was like, all right, I'm selling too. And we got the hell out of this one. But I mean, it's ugly. And I think I lost like, because my average was like 55.7. So I really didn't make any money on this. It was only 700 shares. It wasn't a big position, but it's just one of those names where Amazon has their whole pharmacy initiative that's been weighing on them. Obviously, the Novo lawsuit's been heavy. Then you have the CEO with the whole controversy of, selling shares after quoting people on X saying that there's a squeeze happening. Like, you just had a lot of negative things go back and forth on this one. And it just was not able to play out. I had Hims at 8. I gave it away at 12. I mean, this stock, again, if you got in when it was at like $3 to $10 for like 2 years before it exploded to 70. So a lot of people did make a lot of money on it. It's just for people like myself who got in around the 40s and 50s, it ended up not being the best trade. And the best thing you could have done is just got the hell out before it collapsed. Rocket Lab right there, 72.80. That's still up 1% on the day. Amazon, are we down on Amazon? We are down on Amazon. Okay, so I bought Amazon on Friday. I am more and more convinced that although the negative free cash flow likely is going to take the price targets down across the street, this stock is a buy. I don't think them investing in Capex is bearish. Now, it's bearish for their numbers in the short term. But genuinely, if you are investing in Amazon for the long term, which I would like to think that Amazon is an investment 10 years from now that I'll still have, I don't think it's bearish, dude. Nothing they said on that call was bearish. I mean, the advertising growth alone is doing $40 billion a year. You put a 10 times multiple on that, that's a $400 billion business inside of a $2 trillion company that probably should be valued at a lot higher than that, given the margins they're getting on advertising and how that business is growing. NVIDIA, by the way, she's going for 190. Look at that. NVIDIA is seeming to get the benefit of the Capex today. At least that's what the market perception potentially is. So I really don't see the necessity for Amazon to be sold off this heavy, but I kind of don't hate it. I've never been able to buy Amazon this cheap because I didn't focus on it last year. So if they're going to give me another year worth of cheap Amazon, then I don't hate it. Meta is also, I said this over the weekend, Meta is my favorite Mag 7 dip buy right now. The simple reason, they round trip the earnings. So you're basically getting the earnings for free. If it goes back to 650, then you're getting it for cheaper than what, but you're completely getting the earnings for free. And they guided for 33% revenue growth. Like, this is insanity for a company of their size. It's absolutely crazy. And so Meta, I'm buying Meta and Amazon here with the expectation that Meta should get back to 750 by the end of the year minimum. Amazon, I don't know what the hell the stock's going to do, but I do feel like for the long term, it's fine. But the Meta sell-off seems stupid. And if they're selling it off because they might sell some more bonds like Google, I mean, again, I don't think that's bearish. Especially, it would be bearish if Meta was growing like 20%. Meta's growing 33%. Like, you can't guide for that type of growth if you're not having a tailwind from AI, even if it's only on advertising. And I think that's a simple story to get excited for Meta. Google right there, 322. That's almost going green on the day. Bitcoin, are we moving higher? Bitcoin 69, okay, up from 68. That is higher. I had a dream that NVIDIA would go to 205 very soon. After earnings, if NVIDIA is not above 200, I don't know what the market is going to be thinking. I would imagine it gets there. Again, NVIDIA is going to probably they got it for what, 65 billion. They're probably going to put up 68 to 70 billion in revenue. And given the Capex demand, they're going to have to guide. They're going to have to guide really high for fiscal year 2026 on Capex, probably another 45, 50%. A lot of analysts don't even think they could get to 40% growth again year over year. If they do, S&P just went green, then I think that's going to be pretty exciting. Oracle getting a nice pump today. Seeing some of the semis participate. We got Amcor after the bell. I think Amcor will be fine. The only issue with Amcor going into the bell, and this is something to remember if you have a big position in this, it's up 20% for the year. Or not 20%. It's up like 15% for the year. It is up for the year. 14%. Yeah, 15%. So it's up 15% for the year. So I don't think that's necessarily a headwind for them. But, you know, if it were to go down 15% today, it'd be flat for the year. I don't think it would go down 15%. The numbers last time, now the negative reaction that they had last time was because the CEO stepped down. The numbers were actually really good. I think the numbers will be good this time as well, but it has made a move this year. And so that's the only concern I can see going into the print, but overall, I think it should have a good print. Also, I mean, you know, the stock got to 54 at one point 2 weeks ago, so I could easily see it getting back there. NVIDIA 189.40. Let's see if we can get up to 190. That would be a hell of a reversal, right? 171 to 190 on NVIDIA. That'd be very well to see. Pagaya, again, bad guidance for 26. That stock down 25%. Ugly, ugly dip right there. Who's buying the dip on HIMS or Pagaya? Let me know. HIMS still falling 27% down. That one's getting hit. Bloom Energy, good day. That one's green, 4.3%, 149.50. They also had a great earnings last week, which is pretty good. Micron, that one's still down on that Samsung report, 4%. Hoodie, are we holding on to 84? Wow, 86. Okay. I mean, again, if Hood is following Bitcoin, if Bitcoin bottomed at 60, maybe Hood bottomed at 68. Literally hit 68, 67 last week, which would be very nice. And, you know, we don't have to go back to 120, but if we could just normalize around here, that would be nice to see. Broadcom 338, IGV, that's up 1.4%. All right, so software names. By the way, Microsoft and Palantir are the two biggest holdings inside of IGV. And then you have Salesforce and ServiceNow. So as long as Microsoft and Palantir do well, IGV could also get a little bit more momentum. Salesforce, that's down 0.5%. And then ServiceNow is still flat on the day. Why is Amazon down then? It's just Capex? Yeah, I really think it's just Capex. I mean, the fact that AWS accelerated to 24% is unbelievable. But from my understanding, it's really, and you know, they had the price targets lowered on Friday because Capex is going to reduce free cash flow. So the multiples have to come down, which I get. But the highest price target on the street is still 335. Lowest is like 270. So there's still a pretty decent return in Amazon if it ends up working out. BM&R right there, that's flat as well. Oracle 155. Oracle, wow. When's the last time Oracle had a 9% day? It's a hell of a day for Oracle. NVIDIA 190, baby. There she is. There she is for NVIDIA. 190. We needed that We needed that. Let's see if we can push higher. Congrats to people who bought the dip last week. 171. I bought at 178. I did not get the absolute lows at 171, but I mean, this is the most important company in the world. It should not be trading at the multiples that the street had it trading at. It also shows you how freaking irrational the market. Like, really, they took Nvidia down to almost 169 last week for what? What was the reason? There was no reason. The market was bored. Like, they were literally bored. Enphase loses 50 right here, and they took Nvidia down. Broadcom as well, up 2%, getting some love. And so within that boredom, there were some opportunities. However, let me show you guys a couple macro stats. So hedge funds shorted stocks, is from Goldman's research over the weekend, at the fastest pace in history last week. From January 30th to February 5th was the fastest velocity of shorting individual stocks in history in the stock market from hedge funds. So maybe we'll get some covering potentially this week if we can hold on to this momentum. But Friday was not a good day for these hedge funds that shorted as heavily as they did. And then second of all, you have Goldman also saying systematic funds, CTAs, are likely net sellers this week, no matter what the market does. They estimate a renewed drop could trigger about 33 billion of selling. And if the S&P breaks below 6,700, it could open it up as much as 80 billion of selling. Even in a flat market, CTAs are seen selling about 15.4 billion, and in an uptape, still about 8.7 billion. Goldman's panic index hit 9.22 last week, near max fear, with liquidity that was thin. And that led to the volatility that we saw last week. So CTAs, these strategic advisors in the stock market that also control a variety of capital, essentially commodity trading advisors, they sell or buy regardless of what happens to the market, up or down, in a variety of different scenarios. And based on Goldman's research, their argument is whatever the market does, you will have these CTAs that need to delever from the prior buys that they had. The last time they bought heavily was back in November, and that's when the market fell as well. And so you might have some general forced selling in the marketplace that takes place. If that's the case, that's fine. And I think last week we saw a little bit of that already. But if the market is still pricing in these earnings, which it feels like for NVIDIA, they're just getting ready to, and for some of the big tech that's been discounted, these stocks probably go a bit higher. And if companies can produce some really good earnings this week, we got Robinhood, Coinbase, DraftKings, a lot of different companies this week, AppLovin, Airbnb, then maybe that can help as well. So even with the hedge fund shorting, even with the CTA selling, if Lyft and Spotify and McDonald's and Cisco and all these companies can put up big numbers, that's going to be important for the broader market. Microsoft right there going green, 408. NVIDIA, is she still going? Wow. 191 taken out pretty quickly. Back to a $4.65 trillion market cap. Let's see. NVIDIA 191.50. I'm going to check resistance at 192. What was the news on SanDisk? The news was that Samsung is starting more production of HBM for NVIDIA's Vera Rubin platform. And the reason the memory names are down is because that means margins could get hit across Western Digital, SanDisk, and Micron. And number two, it means that supply might not be as sacred if there's if there's just a lot more of that supply that's out there with Samsung producing more memory. So memory really matters. It is definitely something in short supply, but if we get more of that supply, that could easily change how the markets think of it. NVIDIA 192 resistance, 233,000 shares. 233,000 shares. Air Test Systems, that's also up about 1.4%. If someone can buy 230,000 shares of NVIDIA for us right now, that would be amazing. Palantir, back to 140. Back to 140. Nice to see that. Gold and silver. Silver's up 5%. Gold is up 1.4%. Again, silver and gold ran up yesterday because of the Japanese election. You've got a prime minister who's going to print a lot of money, which is super bullish for gold and silver. So that's why those assets went up. Copper is probably up as a result of that. Yep, Capex, that's up 3% on the day. And I mean, that should be good for Bitcoin too, to be honest. Bitcoin at 68,000. Did you close your hood cover call? That's a great question. I will be closing those today. So the reason I'm closing those today is because they have earnings coming up on tomorrow. And then number two is I've captured a decent amount. I mean, literally, I sold those calls to hedge $43 worth of decline. I sold them at 120. So my break even was like literally $80, right? $78, $80. And we're there today. So I want to say I'm calling a bottom on Hood, but obviously if Bitcoin were to collapse, then Hood's going down with it. I just hope Bitcoin at 60 was enough pain, but obviously I could always be wrong. But yes, I will be closing out my hedge stay on Hood. And let's see if I can double dip. Let's see if I can double dip. Let's see if I can capture all the premium from the hedge and then ride Hood back up to where I sold the calls at, which was 120, and kind of get out of here without too many scratches. So I will be closing it before the earnings tomorrow. Now, could it tank on earnings tomorrow? Yeah, it could. I'm not expecting it to make a massive move up on earnings, especially because it's up from 70 to 86, which it never should have been at 70, but still it's already made a pretty big move as of last week. But I also don't think it's going back down to 70. And so I think the goal of the hedge was to protect. It's already protected, and now it's time to move on. Bloom Energy, that's up 6% on the day. NVIDIA, are we pushing? Oh, wow. We beat 192. That was quick. So someone bought those 233,000 shares. 193 resistance is 103,000 shares. 103,000 shares. So if anyone would like to buy, okay, one of you guys bought 103,000 shares. 193. Let's check 194. let's go up. 194 resistance, 74,000 shares. The shares keep decreasing as we go up. Dude, this is really good. It's really good for the world's largest company, 8% of the S&P 500 to be making this move. Whether you own it or not, we need NVIDIA to not disappoint. To not disappoint. Also, again, at 193, it's not expensive. Like, if you believe their growth estimates, at 170, it was like starting to look stupid. But the market came in, and Friday was a hell of a day. I mean, we needed Friday. We really did. Oklo was up 1.3%. Mercado Libre, I feel like this stock went down just because Amazon went down. There was no real reason for it to go down, but it did take a hit. TSM, that's pushing new all-time highs, I think. Is that? Yeah, TSM, all-time highs, baby. 1.86 trillion. Wow. What a difference a week makes. And obviously anything can happen this week. But my goodness, dude, last week, thinking TSM would hit all-time highs was not even the question. There you go. TSM, almost a $2 trillion company as NVIDIA hits 192. BMNR goes green. Microsoft still 406. Micron trying to recover fully. Amcor potentially pushing 50. Where's Intel? Intel is down 3%. Down 3% today. VRT, new all-time highs as well. Vertiv, look at that. That's another data center name with liquid cooling. Yeah, 202, $77 billion market cap. Stock was $4 in 2020. It has made a pretty good return so far this year. Let's check the S&P 500 year-to-date return for companies. Let's see which ones are doing the best so far. Okay, so here is the list. SanDisk is still number one on the list. SanDisk up 150%, Western Digital 64, Teradyne 56, Seagate, Western, and SanDisk are all memory names. That's up 55. Then you have Corning, Moderna, Micron, another memory name, Fix, Comfort Systems, Generic, Dow, Lam Research, Intel. A lot of these names are not the sexiest names in the market. I mean, there's literally no tech companies. There's no Amazon, NVIDIA, Microsoft, Palantir, Robinhood. These were the names last year. I mean, none of them. Not even in the top 50. ExxonMobil is up 24% this year. FedEx, Hershey's. I mean, you're talking about a lot of value names outside of these memory stocks that are leading the market, which is good because it means the breadth of the market is expanding, which is really important. It's not just all on NVIDIA's I was about to say shareholders on her NVIDIA shoulders, but it does mean that there is the potential for tech to catch a pretty big bid because it hasn't this year. It's been everything else. And as you can see right here, a lot of value is down on the day. Financials are down, healthcare is down, industrials are down, consumer defensives are down, real estate's down, utilities down. NVIDIA, Oracle, Palantir sucking out a lot of the oxygen from these smaller names. Lilly is a little green. Some of your private equity names like KKR is green. GE Vernova is green. Meta just went red, but the tech names are holding on. Netflix, are we still dumping? Netflix, wow, we just went below 80. Okay, there you go. I don't think we hit below 80 last week, right? Oh, no, we did for a second on February 4th, 79.23, but we bounced really quick. Look at that. Even we just hit 79.95 and we bounced up to 80. Something around Netflix doesn't want it going below 80. I mean, that was a quick bounce. It would have, we would need a real breakdown below 79, 79.96 right here to see it getting hit. Elf down 6. They had a good earnings. This stock was up 20, then it ended up falling down. Estee Lauder also down 2. This one got hit pretty heavy last week. NVIDIA losing 194, but that's at 190.160. ServiceNow still flat on the day. Did you see you were in the Wall Street Journal this weekend? I did not see the article yet, but I do know that the article came out. Yeah, this was the article. Trump praises Dow 50K, but young investors are not. So actually, people should read this article. It's really cool because I told her the story about how when Trump said the stock market was like at an all-time high, all of us were like, no, it's not, because none of us knew that he was talking about the Dow. And yeah, let me try to find the article. But she basically told the story about that. She didn't send me the link to the article, though, so I don't know which article. Okay, if someone has the link, send it to me, and we'll read the paragraph out live. But yeah, I know they got published over the weekend. Broadcom right there, 340. Yeah, the story was really funny because, like, she thought it was the best story for this article because, like, Trump cares about the Dow, but all of us were like, what is he talking about? The stock market's at an all-time high. Like, no, it's not. The S&P is flat. And then we realized, oh, it's the Dow. And it goes to show that, like, people just don't care about the Dow as much. Oh, here it is. Here it is. The Dow, the uncool index, has its moment in the sun. Red Cat also has earnings tomorrow. Yes. Amit Kukreja was live streaming his market insights to an audience of day traders a couple of months ago when he was caught off guard by a social media post by President Trump celebrating all-time highs. Wow, that's crazy. That's wild. Okay, we'll read it later. I'll put the link in the chat for anyone. We'll read it at the end of the stream and we'll see what they say. Yeah, why should you say day traders? Are you guys all day trading here? Do we all have day traders? Are we all day traders here? I think she forgot to say just investors, but CoreWeave, that's up 4%. Nebius back above 90. Who day trades? Put in the chat if you day trade. I know there's a decent chunk of you that do day trade. A lot of people have told me they watch the stream while they're trading because they just need the news updates. And when you're trading, a lot of it's rooted in news. And, you know, I might call out a certain stock that's up 4%. And if you're day trading the momentum, then you go to that stock and you see if it fits your criteria to trade. I ran right there, 43. The stock was at $30 last week. Rocket Lab back to 75. Look at that momentum in space. ASTS back above 105 as well. That's not slowing down either. Okay, let me do a poll. Let's do a poll on this. I think I can send, I have a Wall Street Journal subscription. I think I can send you guys a gift. Okay, I don't know if I can send multiple gift articles, but no, I think I can. Okay, click. All right, I'm putting the link in the chat. This is a gifted. See if you guys can get that for free. So click that link. It should be free. I don't think it expires after one person clicks on it. If it does, then the first person to click gets it for free. But I'll read it at the end of the stream anyway, so we'll all be able to listen to it. Okay, so 57% of you said we'll go green today. Let's do the poll. Do you day trade? I did this poll, I think 2 weeks ago, and I think it was like 70-30 were the results. It might end up being the same here. Affirm right there, 57, that's up. Oklo, that's up 3. NVIDIA losing the 191 range. I don't think we have any macro data today. Yeah, nothing coming out today. We do have some Fed talk later. We'll see what the Fed presidents are saying. It's still a paywall? Okay. So I'll read it at the end of the stream and people will be able to see it. Red Cat, are we squeezing upward here? All the drone names, I think. Red Cat, wow, 6% right there. Ondas, that's up 6% as well. SoFi 2103. Again, I think the Noto interview with Tanner was super bullish, and it shows that Noto does not think the stock deserves to be here, and he's going to do something about it. I mean, they're going to start publishing their own research on how to value SoFi, which I think, yeah, they should. There's no reason they shouldn't. Ethereum 2000, Astera, that's up 7%. A-Lab and ANET getting a little bit of a bid. And Palantir just under 140, but still touching 140. Okay, the link is working for some of you guys. Getting no paywall. Okay, cool. So that link should work. Yeah, usually when you gift an article, I don't think it has a limit on the amount of people that can click on it for free. So I'll put the link again right there in the chat. Okay, what else do we got? What else? So, relatively green day. This is important. OpenAI, let's look through some headlines. OpenAI will be testing ads in ChatGPT starting very soon. Again, Anthropic had a lot of different ads over the Super Bowl around OpenAI's ads being like bad for AI. XAI burns $1 billion monthly through last fall. Apollo is nearing a $4 billion deal with XAI to buy more NVIDIA chips. So you got private equity continuing to get into the data centers. Bitmine has 4.32 million ETH. I believe they bought some more over the weekend. Let's see if I can pull that up. But they did buy more ETH. Not a lot, but they did buy more of it. Red Cat still up 6%. Intel down 2%. NVIDIA back to 191. We talked about Salesforce and ServiceNow. Dan Ives getting more bullish on those and their Ives AI 30. Another bank said AI threat could hit software credit. A sharp sell-off in software stocks reflects growing concerns about the business models, which could spill into the credit markets for the bonds on those software companies. Oil prices, let's take a look at that as well. We didn't have any Iranian strikes over the weekend, although a lot of people thought that would happen. Oil's up 1% on the day. So you got oil spiking up a little bit right here. Palantir again, 139.35. SPY is holding 690. Oh, here's a stat that I think is really interesting. This also is kind of consistent with the job report that we got. GLW Corning getting a bid as well. Again, they had a big deal with Meta 2 weeks ago. Wow, Corning up 5% today. Then the other AI infrastructure companies like Vertiv also catching a bid. So the street kind of rotating into those after a week of pretty ugly selling. Total consumer credit was up 24 billion in December. Record 5.1 trillion now in the United States. This marks the biggest monthly increase of 2025, the largest since 2023. Revolving credit, which includes credit cards, jumped to 13.8 billion, 1.3 trillion, the highest since November 22. This was the largest monthly increase since 2023. Non-revolving credit, mainly auto and student loans, soared 10 plus billion to a record 3.78 trillion. The average credit card interest rate still is at 22% as Americans are fighting surging prices with more debt. We have a lot of credit in this country. That's not slowing down. That's another reason this AI story can't fade away, because if credit collapses and we don't have GDP growth, it's just going to be ugly across the board. And so we kind of need GDP to be elevated enough if we do have broader credit concerns. Now, again, for the past year and a half, people have been screaming about consumer credit tightening and defaults rising, all that stuff. It hasn't necessarily resulted in some massive cataclysmic downturn in the economy, but it's definitely playing with fire here. And we can't have the markets get hit as well. Bitcoin right there, 69.5. CoreWeave up 6. Bloom Energy up 7. A lot of names that got sold off last week, they are holding on to the green momentum. Now, CoreWeave got to 115 at one point, so this got to 71. But again, at 71 to 95, that's a pretty big move. They're seeing right there. Wow, Adobe. My goodness, dude, 265. Last time it was at this price, September 22. Unbelievable, dude. Unfreaking believable. I mean, Adobe's not even kind of getting a little bit of credit right here. 71% of you say no. That's what it was last time on day trading, 70-30. Still, 30% is a decent chunk of people that day trade. Ahmed, how come you don't stream on Robinhood Legend? Well, I have asked them multiple times to fix Legend, and they haven't followed through. As much as I love Robinhood, they need to fix some of this stuff. There's various things I told them you guys got to fix, and they haven't fixed it. And to be fair, they're not optimizing for a streamer. I get it. But like at the end of the day, if you're not, then it's hard to use it. This is why when people say I'm biased, I'm like, bro, I'm literally not even using their product on stream. Like I love them. I have a big stake in the company, but I'm going to use what works. And it's like, it does, like on earnings, it doesn't even show you the percentage move up or down. It blends in the after hours move with the intraday move. How am I supposed to accurately say if a stock is up or down on earnings when we're in earnings season if I don't even know the percentage move? So I told them there's a lot of things and there's a ton of other things. I'm like, guys, you got to fix this stuff. This stuff is just can't be there. So hopefully they do it, but I don't know. Me not using their product, I don't think is the reason why the stock went down. Databricks completes $5 billion funding round at $134 billion valuation. Okay, so Databricks, this one looks like they're ready to IPO at the end of the year with Anthropic as well. Would not surprise me if they get ready to IPO. Do you think the World Cup will be bullish for Hood? Yes, but that's going to be in Q3 and Q2. A lot of the prediction markets volume might die down, which is one concern I know that some people may have. Now, a bunch of analysts came out today and they said the sell-off on Hood is stupid once again. So you had a couple analysts reiterate their 130, 140 price targets. And they said this is not something that people should be as concerned about. Barclays came out. They said crypto could be weak. That's why sentiment is down. Prediction markets, they still expect to be really strong. And they also said Hood has a robust and active product pipeline with newer rollouts in European tokenized equity. So they're understanding why the sell-off's happening, crypto being a big part of it, but they're not necessarily saying it, deserves to continue going down from here. Bitcoin still at 68.5, Palantir holding 140. We talked about the Chinese sell-off this morning in U.S. debt. Saylor bought more Bitcoin, 78,000. He bought another 1,000 Bitcoin. I don't know where this guy keeps getting the money to buy Bitcoin, but he does. So you've got MicroStrategy buying the dip. Needham reiterated Reddit at 300 for their price target. They thought the earnings were phenomenal, and they don't think that it deserves to decline as much as it did. ChatGPT traffic is also pretty strong. In January, 5.7 billion visits, the fourth highest month on record. 3% month-over-month growth and 48.6% year-over-year growth, the highest among the world's top 10 websites. Google, for context, is at 88 billion. YouTube's at 34 billion. So, I mean, ChatGPT still has a long way to go, but the growth is pretty remarkable as it continues to get this momentum. And they also had an ad during the Super Bowl. They had an ad around Codex, which is their Claude Code competitor. A lot of people thought they wouldn't have an ad, but they ended up having one for Codex. Adobe's still falling, down 1.3. GLW, that's up 4. AppLovin, again, that short came out today and said that we were wrong on our short report. AppLovin, that's up 10% on the day. Massive move for AppLovin. Ondas is up 8.3%. Palantir 141. Nice to see that getting some recovery. And then SPY at 691. The Ondas interview with the CEO still in the works. Again, he was traveling all of last week. So I'm going to try to get that done as soon as possible, but really it's based on his schedule. So hopefully in the next 2 weeks, we can get that set up. Elf right there, that's down 9%. That one's still getting hit. Hims, at least the bleeding stopped a little bit. It was down 30. Now it's down 25. Got to bounce off 16. Maybe it'll stay at 17. Netflix, are we still below 80? No, Netflix, it bounces. Bounces pretty nicely every time it touches below 80. Nebius, that's up 6%. Nebius and Iren continuing to move. Iren had earnings already. Nebius has earnings on Thursday. So that'll be an important earnings as well. And then TeraWulf, yeah, that's leading the AI HPCs. That's up 12% on the day. Why is ELF down? Honestly, I'm not sure. I mean, I don't even think they said tariffs were the biggest concern during the quarter. And the stock was up pretty heavily on the quarter. Q3 marked the 28th consecutive quarter of net sales growth for ELF. Yeah, I'm not sure. I'm not sure why that got hit. But if the tech companies are getting hit, I mean, a lot of the retailers that don't have margins as good as the tech companies are also probably susceptible. Is ELF going to make some memory soon? That might help. NVIDIA back to 192. I mean, overall, you're seeing the broader market continue to not necessarily get hit. S&P, if we can break 693 today, that'd be very nice to see. If we can at least hold 690, I think the biggest thing for everyone, Intel back to 50, is just not wanting to retouch the lows that we had last week, which, again, the more green days we have, or at least stable days, the less likely I think it is that we revisit Hood at 68 or Palantir at 125 or NVIDIA at 170. Like, Nebius got to 67 last. I mean, if we can just hold on here, maybe we can go further. Also, this would be a big FU though to the hedge funds, because again, they shorted pretty heavily now, unless they're covering today or they started covering on Friday. If they don't believe in this rally and we continue short, or they continue short, and we keep going up, there's going to be a bigger squeeze at some point, which maybe gets us green towards the middle of the year. By the way, Trump signed an executive order on Friday that quadruples beef imports into the U.S. from Argentina. So we've got more beef coming in. Also, take a look at this. I was looking at a bunch of different Claude videos over the weekend. And man, this stuff is crazy. So this is Claude making a PowerPoint presentation in less than 5 seconds off of a PDF that you just attach to it. I mean, this is white collar work, right? Making presentations. Like, it's either going to empower the consultants at Deloitte, or it's going to replace them, or it's going to be, you're not going to have to hire as many. RG says, I'm using Claude at work right now. I mean, it's kind of crazy, dude. Kind of crazy. Like, making presentations is a big part of white collar America. And that's being automated now in a pretty aggressive way. Could you explain how the S&P 500 was not even down 1%, but these individual stocks got hit hard? If we get a rally, then the S&P is going even higher. Well, the simple answer, and we looked at a couple charts last week, was breadth, right? So although a Palantir was hit really hard, and Palantir is in the S&P 500, JP Morgan wasn't. JP Morgan was relatively flat last week. So as the breadth continued to expand, that's what kept the S&P 500 elevated, which is good, right? That's healthy. Like, you want to see that happen. But the problem is, the reason the S&P 500, this chart right here kind of explains it, has gone nowhere over the past 3 months, is because the largest 7 companies still control 40% of the market cap for the S&P. So JP Morgan, Lilly, et cetera, can keep the S&P afloat, but until Amazon, Google, Microsoft actually make a gap up of at least 5 to 10% over the coming months, the S&P is going to be flat here, unless JP Morgan goes up like 40% or Eli Lilly, but that's not realistic, right? That's not happening, at least not in the short term. which is why the S&P is the worst performing index across the world. I mean, every other index for pretty much every other country is beating the, outside of India, is beating the S&P. And they don't have the sort of same risk of 7 companies controlling the fate of the index. But that's also why it's a stock picker's market. And a variety of names have worked this year outside of just large cap tech. Tesla right there, 412. Tesla going green on the day. It does a great job at automation formatting on Excel. So I haven't used AI with Excel yet, but I could imagine for those that have, it's got to feel like a bit of a game changer. Microsoft also, I think Microsoft ran an ad yesterday in the Super Bowl about Copilot now using Excel. That was the entire point of their Super Bowl ad. Yeah, that was their Super Bowl ad. Microsoft flexes AI capabilities in football-centric Super Bowl ad for Excel. So, I mean, Excel, PowerPoint, a lot of this data entry, data analysis work, if that's happening with AI as a tailwind, I feel like that shouldn't be something that is ignored. Also, once again, take a look at this chart right here. I mean, again, for people screaming bubble, this is some decent research put out by ARC, I believe. The PE ratios for the Mag 7 companies, big tech companies versus .com bubble, significantly lower. We are not at Cisco, Oracle, Nokia, Intel, Microsoft types of PE multiples. I mean, those got all the way up to 100. NVIDIA's at 25. Like, it's just not that bad. So, I don't know. This continues to make me feel relatively bullish. Like, we already had a little flush out last week. Probably a needed flush out, a needed deleveraging event. Crypto got hit. Everything got hit. Growth got hit. The Mag 7 round-tripped earnings like Meta. And they're still as cheap as they were before they put up numbers. Amcor back to 50. Which, once again, makes it feel like a buy versus anything. Oracle trying to go up 10%. What do you think about Duolingo? I mean, look, Duolingo down to the 3%. Duolingo is the poster child for a company getting commoditized by AI. I don't fully believe that the entirety of their business gets hit by AI, but until they reaccelerate growth, which growth actually declined last quarter in certain metrics like monthly active users, then this stock is just not going to get a bid, especially when NVIDIA is trading at 25 times, Meta is trading at 18. Like, would anyone really buy Meta or Duolingo for the next 5 years? It's obvious people are going to buy Meta. Again, when you pick an individual stock outside of the Mag 7, you're really thinking there's an asymmetric upside to that stock for some reason that takes away the security of buying an Amazon. And I don't know if Duolingo is necessarily providing that. Pounce right there, 142. That one's getting some more momentum. Red Cap, that's up 10%. Oracle trying to go for 10% on the day as well. Wow, 9.7. Last time I think we had a 9.7% day was back in September of 2025 when they reported earnings. I think that was a 30% day. So it's been a while since we had this big of a move. Amcor earnings is today after the bell. Congrats on the Josh Brown interview. Yeah, thank you guys for watching it. We officially launched the pod over the weekend. I hope people enjoyed it. Josh Brown, again, he's just exceptional. And, he's one of those people that, like, when he talks, you listen, just given his career in finance. I'll link the podcast right there if anyone wants to watch it. But yeah, thank you to everyone who subscribed and checked it out. We got a new guest on Thursday, and we are officially getting into the podcast game. And we're going to see if we can make this big. We're going to see if we can make it big. Also, a lot of you guys like the name. I didn't think you guys would love the name. The name is called Basis Points for the pod. Like, the overwhelming majority of you actually said you liked the name. I thought we would get more hate on the name, but people liked it. So I'm happy people liked it because it was very organic coming up with the name. I think you guys will like the second episode as well. I listened to it over the weekend. I think I want this pod to be one of those things where when it comes out on a Thursday night, like it is part of the rotation for people to listen to over the weekend. Because the Compound and Friends, it's part of my rotate. Like honestly, dude, I don't really listen to a lot of long form content. Like usually it's like clips or something. Like the Compound and Friends is the one pod every week I listen to the entire hour. And it's weird because I usually don't do that, but I want this pod to be one of those that can really get into people's rotations. NVIDIA still moving higher, 190 hoodie, 86.44. S&P high of day, baby, 692.28. The bulls are back. We had a little pit stop for a week in the 670s. The bulls trying to be back. You watch it on 1.0? Yes. I'm not like you lunatics that actually watch a video at 2x. I know I talk in 2x, but I've never listened to something in 2x. You guys are crazy. Like, I put it on in the background, I do work, and I'm listening at normal speed. The reason I speed up videos when we're live is because, we don't have all the time in the world and we got to get through stuff. But for you people that actually listen to podcasts on 2x, that's crazy to me. Even 1.25, 1.5, I can't do that. But like, no, if I'm going to listen to the pod, I'm going to listen to the pod. Even though it makes sense, obviously, it's a long time for these, like Lex Friedman podcasts are super long and stuff like that. Although Lex Friedman hasn't had a big interview in a while, right? Like do people still like watch his stuff? I feel like he's taken a big break in the podcasting world over the past couple of months. Yeah, like he's done like 4 pods in the past 2 months. He used to put out a pod like every other day. You speak in 2x all the time. Now we're used to 2x. Yeah, I know I speak fast, but I still can't listen to pods in 2x. Broadcom, that's up to AMD 213. We are green on our AMD buy from last Friday. SoFi 2114, Tesla 414. We're not seeing too many headlines, guys. I mean, markets are relatively stable today. Let me pull up this to quantify the IGV momentum, because you do have a lot more excitement for software, even though those stocks are down. But things are kind of slow and steady, which is good. Because last week we dealt with way too much shit, all of us. And I think having some peace would be nice. What's your entry on AMD? I believe it was 208. 208 something was my entry on AMD. Investors are rushing into U.S. software stocks. The tech software ETF IGV posted a combined $1.5 billion in inflows on Wednesday and Thursday of last week. This is only second to the $1.7 billion it had in 2024. 86 million shares were traded on Thursday. So you definitely have people buying IGV. I wonder if this is retail or if this is institutional. I would imagine a mix of both. But people are buying software. And realistically, the software names just have to put up good earnings to end out the cycle for this to continue. 415 right here on Tessie. Atlassian down 4%. Enphase down 2%. Oracle up 9%. S&P, she's trying to go for 693. FDA tells Novo that the Wegovy ad is false or misleading. Novo still up 5%. Okay, so the FDA telling them that their ad is false. Again, Novo still suing Hims. Hims is down 25%. Oscar below 12. This one, Molina Healthcare took a nasty beating last week. That's why Oscar is getting beat as well. Did you buy Amazon? Yes, last week. Bought Amazon. I mean, if they want to take it below 200, then again, I think Amazon is just going to be a relatively decent buy. Also, we're not pricing in the impact of robotics on Amazon yet. And maybe that's too far of an impact to price in. But the street's giving them zero credit about that. They're just concerned about the Capex. I mean, it's funny because they're spending all this Capex to grow AWS. AWS has the highest margins in the entire company. at 36% op margins. And AWS is growing the fastest at 24%. And it's re-accelerating growth. So the idea that Amazon is spending to make AWS like a behemoth in the AI cloud compute world, and the street thinks that's bearish because free cash flow goes negative for a year. I don't know, dude. That doesn't make long-term sense to me. Maybe short-term it does. But I think that makes it a buy. Reddit right there, 140. That continues to green. Did you buy Shopify? No. Look, the problem with Shop is that it's still expensive. Shopify is not a cheap name. It's just way cheaper than what it was before. And I, you know, if you buy any of these software names, you're calling BS on the software decline, which I think it is BS, but I don't know if the market's going to treat it. I mean, when you see Adobe down to 2022 levels, it really makes you wonder how much more pain do these software stocks have to deal with. But I feel like at this point, I might as well wait till Shopify earnings, which they're probably going to crush. But I wonder if the stock will react positively to this. Light up $40. Light also crushed earnings. Lumentum, that's up another 6.7%. This one had a really good, they actually fell on earnings and then they got a big move higher. S&P 692.50. Do you like Seagate? Seagate already reported earnings. I mean, again, Seagate, Micron, Western Digital, all of these are memory names. I don't think I could sleep at night owning the memory names unless you bought them at a way cheaper price. Like, dude, SanDisk was $725 last week. It was $620 in the pre-markets. Like, this type of volatility is just, I'm not built for all that, especially in a space which is a commodity at the end of the day, which is memory. Now, it's a very highly lucrative commodity that we need a lot of. But I don't know. Again, I think their earnings will be fine. It's just one or two headlines takes it to the downside pretty easily. ASML, that's still holding up as well. 1.4%. Jensen had some really good praise for Meta last Friday as well. He did say Meta is one of the best use cases or one of the best companies that's using AI. And so he was pretty excited to talk about how they've implemented a lot of their GPUs as well.
The opportunity to for this new era of software is incredible, and we're seeing it already moving the earnings of Meta. Nobody uses AI better than Meta, and so if you look at the way that they're using AI went from a classical recommender system running on CPUs to now a generative AI agentic system that's making recommendations. Everything from the way social media works and the way they recommend ads and help advertisers create content has fundamentally been changed, and their earnings show it. And that's the reason why they're investing so hard. They see just a much larger future potential for it.
And they're guiding 33%, which again is also pretty crazy. Let's get an update right here on OpenAI as well.
That Super Bowl ad yesterday, but from what I'm hearing, Sarah, OpenAI CEO Sam Altman has really been trying to emphasize some of the momentum in ChatGPT and the company's coding product behind the scenes. It comes as the AI giant looks to close what we've reported could be as much as a $100 billion funding round and also fends off competition from Google and Anthropic. According to an internal Slack message I saw over the weekend, Altman told employees that ChatGPT is back to exceeding 10% monthly growth, says that they're preparing to launch a new model this week and highlight some of the momentum in OpenAI's coding product. It's also known as Codex, that grew roughly 50%, he says, from a week ago. One source telling me now a bit closer to 60% with 1.3 million users. This slice of the AI business is a lot more lucrative than just the consumer business, and this slice of it competes directly with Anthropic and Claude Code. That AI tool has seen a wave of adoption, is largely credited with the rise of vibe coding, if you've heard that term. A source telling me Altman and CFO Sarah Fryer, meanwhile, have been delivering the same growth messages to investors as they look to wrap up that funding round I mentioned. They are highlighting some of the momentum in the enterprise business, coding in particular, and then OpenAI's grip on consumers with ChatGPT, access to compute as well in some of the private meetings out there with investors. A source shared a chart with me, too, that's being circulated with investors showing OpenAI's market share gains in enterprise and coding, basically underlining that OpenAI is really trying to come for Anthropic's B2B business. Competition between those two companies As you mentioned, Sarah, it has spilled into the public eye recently. In case you missed the Super Bowl ad, Anthropic ran this commercial that poked fun at OpenAI's decision to run ads within ChatGPT. Altman last week responding, saying that the ads were deceptive, guys.
Yeah, Kate, obviously, we're also keeping a close eye on the fundraising efforts of OpenAI. I know you've been reporting on that. Do we have any sense as to where we are, when we may see an announcement, what the number could come in at?
So it's looking the next couple of weeks. I'm told that it's ramping up, is how one source described it. The round is oversubscribed, and they're seeing similar interest to sort of the SoftBank round. Similar to what you've reported, David, I'm hearing that Amazon is going to be a big strategic in this, which would mark a huge shift for that company in particular and moving away from Anthropic. So as we look at sort of the competition there, that would be an interesting piece of news to our audience. That could be up to $50 billion, according to sources. If you look at just the Amazon slice, you also got NVIDIA, SoftBank. I think it's going to be the next couple of weeks here, but I'm also told it could come in layers. And we might get the strategic first. We might also get the sovereign wealth funds that are expected to participate. So maybe a slow drip here, and the $100 billion amount could sort of add up in different sort of, tranches isn't the right word. But
the other reason why Amazon's down is because they filed for a mixed shelf offering, and that likely is going to be used to help them invest into OpenAI, which means they're going to be diluting shareholders. So that's another reason I think Amazon's been getting hit. Now, again, them investing in OpenAI is probably bullish because OpenAI is going to buy a lot of compute from them. But if they are putting in, more than $10 billion, they're going to have to dilute and raise some equity. And that might be another reason why Amazon's getting hit. App11, right, they're up 11% on the day. Nebius is up 5%. What do you think about Spotify tomorrow? Spotify is a stock that, again, I think has had a really good string of momentum over the past couple of years. Stock was at 70, went up all the way to 700. There's two issues with Spotify. Number one is that their free cash flow margins are growing, but they're not growing at a rate that would make investors super, super excited to pay, 50 times earnings for Spotify. And now at one point they were. However, a more qualitative reason I think Spotify took a hit is because Daniel Ek, the CEO and founder, stepped down. He's not the CEO anymore. They have two co-CEOs. And I don't know. I think ever since then, the street's been a little iffy because the guy, this is a founder-led company. Founder-led companies tend to get a premium because you believe in the founder, and now the founder is not there anymore in a day-to-day operating role. So I think that might be the issue. The other problem is, their user growth is good, but it's not as strong as it was before. They're still growing users in a healthy way. They have like 670 million people using this thing. And so their user growth is like 10, 12%. It's not at the levels that it was a couple of years ago when they were bottoming at $70. They have a 2030 plan to get to 1 billion users, which I think they'll get to. But again, it's just like, how exciting can the growth actually be for Spotify? So, I like it. I don't know if I would buy it. I just think there's things that are way better in terms of margins, with their gross margins. NVIDIA has better gross margins than Spotify, which is hilarious because NVIDIA is a hardware company. Spotify is a software company. And then number two, you have the ongoing feud between the record labels and Spotify. How much leverage do they really have over the record labels? And although they raise prices, again, every time they raise prices, a lot of that money still goes back to the record label. So I just don't love the business model that much. But could they pump on earnings given they're down 30% from the top? Yeah, I think that could easily happen. Okay, JD Vance and the U.S. PM from Armenia have signed an agreement on development of a cooperation between the U.S. and Armenia in civil nuclear sectors. I think JD Vance is live right now, if I'm not wrong, talking about this. Let's see. So, yeah. Okay, let's go to this real quick and see.
Happening because of the Prime Minister's leadership. I'm also very proud to talk about the TRIP Enterprise Fund. I think most of you here are familiar with TRIP, with the historic transformation that it's going to bring to the region, but let me say a couple of additional things.
In West and East, for relation to
but also to the people of Armenia. And what President Trump and the Prime Minister have accomplished together is really visionary. Peace is not made by cautious people. Peace is not made by people who are too focused on the past. Peace is made by people who are focused on the future. And because the Prime Minister made such great progress and has had such a great relationship with both me and the President of the United States, we're not just making peace for Armenia, we're also creating real prosperity for Armenia and the United States together. So much.
Okay. I mean, should be bullish if we have more peace deals across the world. You shouldn't see that as something necessarily bearish. S&P high of the day, 693. We touched it for a second. Let's see if we can break through that right now. Just trying to get back above this level. Fubo, how's that one doing? Fubo, that's down 4% on the day. U.S. urges ships to avoid Iran and Hormuz Strait. Okay, some more Iran headlines. Again, we have not striked yet, but you have a lot of people still betting that could happen. Hims also just tweeted, Novo's lawsuit is a blatant attack by a Danish company on millions of Americans who rely on compounded medications for access to personalized care. Once again, Big Pharma is weaponizing the U.S. judicial system to limit consumer choice. This lawsuit attacks more than just one medication or company. It directly assaults a well-established, vital component of U.S. pharmacy practice that has improved patient care for everything from obesity to infertility to cancer. Hims has a long history of providing safe access to personalized healthcare to millions of Americans. Yeah, see, I just don't know if anyone wants to deal with this headwind of them going up against Novo. I mean, Hims is a $3 billion company, which is kind of crazy given the growth rate, but them going up against Novo, I don't think is the easiest to do. And Novo has had their own issues, but Novo is a $220 billion company. We broke the law and it's not fair. Yeah, exactly. That's what they said. You know what sucks about this too? One of the lead product people at Robinhood left to join Hims last year. And that's when sentiment on Hims was a lot better. But I remember seeing that and I was like, dude, why the fuck are you leaving Hood for Hims? Like, yeah, maybe the stock-based comp in Hood is not as juicy anymore because the stock ran up already, but still, it's like, it's Hoodie versus compounded drugs. So I don't know. That stock still down about 25% of the day. Also, the head of marketing at Hood left to join SoFi. So I don't know what offers these companies are giving to Robinhood employees. But the previous head of marketing at Robinhood left to join SoFi. Literally like a month ago. People saw this from their LinkedIn. So I guess some of these companies just trying to get some better talent to keep this going. Shopify right there, that's up 1.3. Novo's up 4. S&P, there you go, 693.30. 693.30. High of day. Lilly just lost a 5% pump. I don't know why that happened. That was weird. Wow, yeah. Just straight decline over the past 20 minutes. Let me see if the other pharma names are down too. Lilly was holding really nicely. Oh, Lilly acquired a company today, Orna Therapeutics. $2.4 billion. Well, the street liked the acquisition 20 minutes ago. Well, I guess they don't love it that much anymore. Lilly acquiring Orna Therapeutics for $2.5 billion. Where's the Dixie? The dollar is down. Down about 1% on the day. That's a lot. What happened with the Supreme Court tariffs? Your guess is as good as mine. I don't know if we're ever getting an answer on these Supreme Court tariffs. We were supposed to on January 20th. That didn't happen. I don't know. Maybe, look, I think the Supreme Court wants to strike down the tariffs. I really do. I think they think it's unconstitutional on every level. But I think they're also like, if we do this, it's going to create a lot of external ramifications for national security, all the negotiations that Trump is, like the actual practical implication of reversing the tariff thing, given it's been a year and a half of him signing all these deals with tariffs. S&P, new all-time, not all-time, but new high of day. That, it might be a little dicey. And I wonder if the Supreme Court just wants to wait it out, which they've done in the past. They've waited years sometimes before giving a decision. I don't think it'll be years, but the longer they wait, the worse it's going to get because Trump is using these tariffs to try to make all these new deals like he did with South Korea last week. And if it's illegal, I don't know if he can use it in a meaningful way. Yeah, maybe if he loses the midterms, then they'll strike it down. But I don't know. I don't think we're getting an answer on that anytime soon. Hoodie right there, 8670. Bitmine still up 1%. ServiceNow goes green. Salesforce goes green. And Microsoft up 2%. Back to 410. You cannot stop something illegal just because it's complicated to reverse. Look, that's a fair point, but the Supreme Court has a history of actually looking to a practical implication over a policy that they would be reversing or not reversing over the constitutionality around it. So it's not above the Supreme Court to potentially allow things to linger on. It's just, when will that answer take place? Goldman says there will be a rebound in U.S. IPOs in 2026. Expect 120 listings and up to 160 billion in proceeds. Goldman pretty bullish on IPOs again. Stripe, Klarna, Anthropic, OpenAI, SpaceX. Those are the main ones. EU proposes to remove 2 Chinese banks from sanctions. Okay, Europe getting friendlier with the Chinese. Silver and gold, those are still moving. Roblox had a great earnings. This one up 10%. This one holding on. Some more of that momentum. VRT, that is up 5%. Oracle, another big winner of the day. That's up 8%. Nebius and Iren doing great today. Nebius up 6%. A lot of the data center names not fully slowing down. Ulta, wow. Ulta, how much is Ulta up year to date? Ulta, 12% year to date. There was a good chart. Let me see if I can find it right here. Of value stocks being essentially value having one of their best years in over a decade compared to growth. And you're seeing that across the board with the names that are in the top 50 for S&P 500 returns. Yeah, look at this. This is from Barclays. Value versus growth. One of their best days ever compared to growth stocks as of last week. If you look at the 1-day percentage spread between value and growth. So definitely you had a rotation into names that are not going to be as volatile, like a Verizon, for example. But does that continue? Verizon up another 1% today, 46.80 on Verizon. Is HIMS a buy? Who's buying the HIMS dip? Put in the chat. Who's buying the HIMS dip? I mean, look, I kind of do think this should be enough pain at this point, but it's a nasty overhang with Novo. I just don't know if I want to be part of it. But I understand, even if you're just trading it to get a swing back to like $20, I don't think it's crazy. Falling knife, bought the dip. It's kind of 50-50. It's looking like Pagaya dip is better. I got to look into Pagaya. Nate likes this name a lot. I don't know anything about it, but it's down 20%. So maybe there's something decent here. It's just guidance was a bit lower. And again, with some of these companies, like when Meta's guiding at 33%, and then these smaller companies can't beat on guidance, it makes you wonder, dude. Like, it really makes you wonder the opportunity cost of some of the money stuck in these names versus the best companies in the world guiding as well as they are. Look into ELF. Hasn't ELF already had a massive run? This thing was like $4 a couple years ago. It's 74. Why are people so excited about them? Like it's done its thing. It's had a big run. I listened to one of their earnings call last year, and I really do like management. Management's awesome, but like, why are people so excited about ELF? I feel like it's made the move that it was going to make a while ago. But then again, I haven't looked that deeply into it. What do we think about Grab's earnings? Grab is going to have to put up some good guidance. I mean, that's going to be the most important thing. I will be very critical if they don't, but we need to see meaningful guidance for this to accelerate. And if we don't, look, is it going below $4? I don't think so. I think that would be a bit excessive. But if we don't see a guide that impresses the street, then it's not going to be pretty. So, I mean, we're going to find out in a couple days. And once again, if Meta can guide for these massive numbers, then Grab and all these other smaller companies, they have to be able to guide. And if they don't, it just begs the opportunity cost question once again. So that's what I will be looking for on Wednesday. App 12% on the day. That continues to go green. S&P 693.77. Symbotic had a good earnings. They had a great earnings. That's up 3.7%. They have the Walmart partnership, $37 billion market cap. It's also not that expensive. I mean, they're not really profitable, but they traded 3 times sales. I mean, this could be one of the better robots. This one actually probably warrants a deep dive more than anything because it's in the robotics sector. And the humanoid robotics companies are just so slow. You know, none of them, Figure, Apptronic, Tesla, are putting up any meaningful results, and they probably won't for a while. Even though Elon says we'll have 1 million robots by the end of next year, I don't think so, dude. I think it's going to take way more time. So some of these other derivative robotics companies probably deserve more momentum. What else? What else do we get? The Gallup poll conducted on January 2nd to 17th shows that half of Americans expect the economy and stock market to improve over the next 6 months, despite many anticipating higher inflation and unemployment. That is similar to the consumer index report we got last week, which consumer confidence seemed to be relatively bullish. Would you buy Oscar here? No. Dude, I think the Oscar train has always been weird to me. I think it's cheap, but people say they don't need the subsidies for this company to do well. And like, maybe they don't. But from my understanding, subsidies are definitely a big part of the story. And that hasn't really been approved yet in terms of the extension for the ACA. I just feel like healthcare in general, outside of the pharmaceuticals, like Molina, UNH, Oscar, all these healthcare names, they're not growing like crazy. And yeah, they might be like in value territory, but I'm not saying they're PayPal, but we saw what happened with PayPal. Like cheap names just got cheaper. So I just think there's lots of other opportunities besides the healthcare names here that are probably a lot more attractive. Now, Oracle, for example, like I'm not saying I'm buying Oracle here, but man, Oracle at 155 got to 132 last week. That's crazy. Does feel a bit more attractive than Oscar at 11. Now, Oracle has their own host of issues with their debt, but you know they're going to put up some monster growth and they're in the right thematic, which means a little bit more exciting. Ulta right here up 1.3, Nebius up 6.5, Nova up 3.7, Amcor up 3.6, and then Reddit at 140. Amazon 208, that's up about 1%. Are you buying Zeta here? I already have a big Zeta position, so no. But I think it's cheap. However, simple reason to not buy Zeta if you're looking for a bear case is that it's a SaaS name. And I feel like they could smash earnings and still get disrespected because they're a SaaS name, which again, it sounds so stupid, but like that's basically been the story with SoFi, right? They're smashing earnings, but people value them as a bank, and then SoFi doesn't get a multiple. I find it hard to believe if Zeta crushes earnings that they get hit, but I mean, why is Adobe getting hit as much as it's getting? Like, I think that's your Shopify, same thing. So that would be the bear case going into Zeta earnings, which Zeta is, I think, next week. It's not this week. So it's going to take some time. SanDisk is down on reports that Samsung is creating a lot more memory and expanding HBM production. That's why that's going up. And Micron also is down on that as well. Based on what my wife says, ELF is a massive buy. Okay, but people have been citing that argument about their wives or their girlfriends loving ELF. The stock is up 1% over the past year. Like, can someone tell me what's wrong with the name? And not even to criticize the company, but why, if it's so popular among women, why is it up 1% over the past year? My simple reason would be the tariffs. Now, I don't think the tariffs are going to be the only defining problem with it. Like, why isn't it moving? Especially if it's as cheap as people say it is. Yes, on the 5-year, it's doing great, but that's also my point. It's like, I feel like the alpha might not be as strong because it's up 2x over the past 5 years. Yeah, I'd be willing to go deeper into it. It's just, what if they keep putting up all these numbers that are so attractive? Why is the street not respecting it? Didn't they partner with what's her name? That girl, Haley Rhodes. Didn't they buy her company? Honestly, that could be the reason why the stock is down. They bought it for $1 billion, right? Because their market cap's only $5 billion. So they spent what, 20% of their market cap? $4.3 billion. They spent 25% of the market cap on an acquisition. Yeah, that could also be the reason, to be honest. What are their margins? How much money does ELF actually? Let's see. What are their margins? Like, do we have at least 15% margins? Is that also the issue? Gross margin of 69%. Okay, but what's the net income margin then? 8? Is that the margin on ELF? 5.9%. Damn. 5.9 to 8.9%. Okay, so the margins aren't the best, but the growth should be able to make up for it, which is, I guess, why they bought Haley Bieber's company. Yeah, I mean, gross margins are fine, but at the end of the day, it's not a software company. So the net income margins, I think, are going to matter a lot more. How much do they actually bring down to the bottom line? Robinhood up 5%. That's holding on. BitMine, that's green. Salesforce, that's green. Microsoft, also green. It's local restaurant margins. Yeah. All right, I'll look into it. I will look into ELF. If you guys want to really look into it, I mean, it is down 10% today. ELF and Symbotic. We'll put those on the list to look into. Oklow's up 5. Relatively calm day, guys. Nothing too crazy. Nothing too crazy. Let's get maybe some coverage on crypto here. And we'll keep going from there.
Let's talk a little crypto. And obviously, you have a public company you're running that's involved with the blockchain. You have a token, I guess, called Hype.
Hype. And there is no hype to this?
There's no. Why not? Why isn't there any hype to this or to Hyperliquid? And how does it differentiate from the overall crypto ecosystem, I guess?
Well, I think it's a very good question, and I think it takes clarity for a lot of investors who look at Bitcoin. And if you follow the kind of the thesis of Bitcoin, it's more a store of value. It's scarcity, and people invest, and we can see the kind of volatility and speculative nature. If you look at Hyperliquid, or Circle, which is we talked about earlier, was an early investment of ours. It's about technology. It's not really about speculation. And I think in the case of Hyperliquid, that technology has led to a layer 1 blockchain that is fantastic. And on top of that, they've been able to put an exchange. And that exchange started out with spot trading and perpetual futures trading and their native token, which is Hype. And we think of it much more as that Hype, that native coin, is really equity in a corporation. So that's a big statement. Why is that? Because the valuation is really based on revenues, based on volumes, based on...
I have no idea what this guy is saying. What the hell is hyper liquid strategies? Is this another random crypto company? PURR? What the hell is this? Has anyone heard of the hyper liquid strategies? What is this nonsense? Dude, what is this? I've heard of hyper liquid before in the crypto world. Dude speaks at 0.2x. A US-based digital asset treasury company focused on maximizing shareholder value by accumulating the native hype token. Oh my God. It's a treasury for hype. I know what hype is. I've heard of hype before. I didn't know they had a treasury for that already. Dude, what if these DATs are when... I feel like the DATs are when crypto started getting hit. When these companies started coming up with these digital asset treasuries, BM&R included, MicroStrategy. I feel like that's when we started seeing crypto just go down an ugly path. And it's not been fun. Even though, yes, there's a buyer, but like still. And that's what Pomp is doing. Let's go to him. He's live as well.
The bigger risk. And so Bitcoin has sold off aggressively over the last couple of months. And I think that is tied somewhat to that deflation. But the last thing is that I also believe that there are other things that people can do in the market if you are into Bitcoin. And so whether that is artificial intelligence, prediction markets, et cetera, there's just kind of more at the buffet, if you will.
Right.
And so it doesn't mean that people are going to leave Bitcoin. I think it just means that there is kind of fractured attention.
But everybody suffered when Bitcoin went down last week. This you think that's really just there's more places for us, more things for us to buy at the buffet table?
I think it's like death by 1,000 cuts, right? So when you have the psychological component of $100,000, I think you have the 4-year cycle. I think you have forward-looking market in terms of deflation. All those things.
Not a normal slight pullback. I mean, this all of the gains that have been made since the Trump administration came in, and that was a Trump administration that has been much more friendly towards the entire crypto sphere. This was supposed to usher in new stability and new ways for more people to come into this. How do you explain that they've pulled back to before President Trump took office?
It doesn't feel like it, but if you actually look at from the peak to now in a bear market, this is the best performing bear market in terms of the drawdown is the least severe out of all of the previous bear markets.
Well, it's supposed to be. As it gets more and more mature, it's not supposed to happen.
Of course. So it always feels like, oh my God, the world is ending. It drops, 10% in a day. Everyone's freaking out. But this is actually less volatile than it's ever been.
The idea that it's supposed to be an inextricable gain, meaning the view had been this is gold. And I would argue, actually, you're right. Now that you have ETFs and all sorts of other instruments that you can buy and effectively sell Bitcoin, not everybody's long. This might actually give you a fairer value or closer to reality because you have sort of a different kind of group in Bitcoin. More people trading it as opposed to people who are holding it forever. And sort of what does that mean for the predictions of folks, including yourself, but take a Kathy Wood or somebody else out there who suggested that, you get to $500,000, $1 million a coin. What does it do to that timeline, if ever? I mean, it's not preordained that Bitcoin has to be, that has to go up. It could actually, by the way, to the extent that it's quote unquote gold, as long as it beats inflation, maybe that's okay, though obviously right now it's not.
I think there's two things that are happening. First is it's definitely not preordained, but if we just go back to the last bear market, we're up over 200% from there, right? So this thing is still performing pretty well over kind of the medium to long term. And the volatility is a feature, not a bug. Like people want volatility, and that's why they're going into this asset. Now the volatility has gone from an 80 vol asset to a 40 vol asset. So it is compressing because of a lot of those things. The second thing is I do believe that there are a lot of folks who are drastically underestimating how big of a deflationary force is hitting the US economy. Like I am probably in the more extreme camp that the artificial intelligence wave that is happening here, it doesn't matter how much money the government prints, they cannot print more that will overwhelm this deflationary force.
That's also what I think Kevin Warsh believes in as well, which is why he's ready to lower rates, but he just doesn't love quantitative easing. So, I mean, that could be one of the reasons why Trump picked him, because he knows that Warsh knows that AI is such a big force that these rates have to come down.
And so when you see that, we've cut rates 75 basis points into the end of the year. We are still printing money. The national debt is still growing, and we are having inflation fall off a cliff. And so when you see that occurring, what you all of a sudden realize is Bitcoin and gold historically have served as some sort of inflation hedge. Now, gold is going up, Bitcoin is going down. People say, why is that? When you look at who's buying gold, it's the central banks. And the central banks are essentially trying to get away from all fiat currencies, not just dollars. And so I think that Bitcoin is just saying to us, hey, look, inflation is not going to be a problem in the next 2 years or so. And so as people continue to buy this thing, I think they're going to hold it. When inflation comes back, which it will at some point, then I think that Bitcoin will do very well over the long run.
What does that mean over the long run? So, and I say that because we've had so many people come on our broadcast and talk about, just as I said, an inextricable rise. If Joe Kernan were here, he would tell you about the halving, and he would tell you about all sorts of numbers that he would argue force it to go up, and would have argued, I think, they force it to go up faster than it is, at least where it is right now.
I think there's two big drivers of Bitcoin going forward. The first is that you're going to get these supply shocks in the halving. The second thing is I think that artificial intelligence and AI agents, this morning our public company is announcing the very first agentic financial firm.
That's where I wanted to go.
And what I believe.
I don't think Pomp has a reason why Bitcoin's down. I don't think anyone has a reason why Bitcoin's down. Bitcoin should be going higher with the money printing that we're having. I mean, you could say gold and silver is taking some of the wind out of crypto, but theoretically, we should be seeing Bitcoin go higher. And look, we bottomed at 60, hopefully. 69,000, that's a hell of a candle. If anyone got in the low 60s, maybe that is the bottom for the cycle. Maybe. I don't want to say that straight up, but if it is, that'd be very nice. And if so, maybe we can put this past us, even if it doesn't get back to 100 anytime soon. S&P, by the way, absolutely rolling. 694, baby. Wow. Up 0.5% on the day. 4-year cycle. Yeah, it might end up just coinciding with the 4-year cycle. NVIDIA 191. Reddit's up 3. AppLovin's ripping. Applied Digital, your Ciphers, Nebuses, etc., they're all up nicely on the day. Rocket Lab's up 5. Silver up 6, gold up 3, Tesla up 2, SoFi getting a nice little move right here as we head into 11 a.m. Palantir even trying to get back to 143. It's a pretty decent day. S&P 694. It's up, and even PayPal's up 2%. Oracle's going up 9. ARM at 122. ARM was at 90 last week. Seeing some good numbers. Is this dead cat bounce? I don't know, dude. If this was dead cat bounce, we better start reversing quick, because last Friday didn't feel like a dead cat. 2% on the S&P. I mean, it's got to fade out pretty quickly for that to be fake. And then again, when you have a hood go from 70 to 85, NVIDIA go from 170 to 192, like those are really big moves. If NVIDIA went from like 170 to 177 and then you had some weakness, that would feel dead cat-ish. This feels like the opposite. This feels like a straight up reversal. And if we end green on the S&P today, that's 2 days in a row. That's going to really help us going forward. Wow, February 9th, 2011, the day Bitcoin reached $1 for the first time. Well, when you put it in that context, February 9th, 2026, 69,000. It's been a decent return, except most of us bought this shit at 90,000. So that's the difference, but still. Is there any AI related news today? I don't think so. I just think NVIDIA is leading the sector. That's why your smaller names are moving higher. SoFi, did we get a dump? SoFi. Oh, SoFi's holding on, 21.44. That's up 3%. Palo Alto Networks, that is up 1%. Palo Alto and CrowdStrike both got cut pretty bad over the past couple weeks. They are SaaS names as well, and I think they'll have good earnings, but the SaaS names are not in favor right now. Today we have On and Amcor. Tomorrow we have Hood. That'll be a big one. We'll also have A-Lab, Ford, Upstart, Lyft, Cloudflare, Centrus Energy, and Zillow. In the morning, you have Spotify, Coca-Cola, Oscar, Datadog, Ferrari, BP, CVS, S&P Global. And then Wednesday, you have Shopify, McDonald's, Grab, AppLovin, HubSpot, Kraft Heinz, T-Mobile. You got a lot of companies this week. A lot of companies this week that are not slowing. NY Fed, January inflation expectation is steady. Credit outlook weakens. Labor market views mostly improved. Credit expectations availability declined. Inflation 1 year ahead of 3.1, down from 3.4. That's actually really bullish for the NY Fed to be lowering their inflation. I do agree with Pomp. AI is going to be pretty freaking deflationary. And if it is as deflationary as we think it is, then money printing is not necessarily going to change that. Let's get an update right there from the NY Fed.
4 points, while confidence in finding a new job rebounded 2.5 points from its record low back in December. We kind of throw this in the basket with UMich and Conference Board and some other indicators too.
Which were better, right?
Yes.
Consumer confidence improving, which is interesting at a time where we're not seeing as much job growth, that people's expectations around job growth isn't falling more.
Yeah. You see the Journal piece this morning about people paying to get recruited to sort of amplify their resumes and get more coverage when for companies that are looking to hire.
What happens when you have fewer job openings, which has certainly been a theme. I think good also to see short-term inflation expectations come down. That was something, as we're pondering what happens next with inflation. We know the Fed watches expectations very closely as well. Meantime, as Carl mentioned, good market day. S&P is up 0.5%. The Dow's reaching a new intraday high after it closed above 50,000 for the first time following Friday's wild rally. Let's bring in Michael Kantrowitz, Chief Investment Strategist for Piper Sandler. I mean, we're climbing these worry spots around overinvestment in AI and around software disruption in AI and around weaker job growth.
I mean, I agree with this right here. If we're getting this much of a rebound with Bitcoin still below 70, when we get real risk on appetite and see Bitcoin back above 100, if we do, I mean, it shouldn't be horrible. It should not be horrible. Amazon going green on the day. Look at AMD. Amazon very close to green. AMD trying to push 220. I think it's at 216, 215.40. I think a lot of people are starting to recover at least a little bit from the pain of last week. S&P still pushing. This is good. This is a good day. We needed this one. We really needed a day like this. I mean, it makes you remember how ugly last week was. Thursday was the worst last week. I mean, Thursday after hours, it just kept going down. Everything just kept going down. And so it is nice to see a little bit of a change right here. Yeah, AI, HPC names are all up 5 to 10% on the day. We are probably not doing a hood show before earnings, but we're gonna start earnings earlier. So we're gonna start at like 3:30 tomorrow. So we'll go through all of our expectations within those 30 minutes before we have hood earnings. Also, Robinhood's like using Zoom this time. They're not using like the traditional thing they use. So I don't even know how I'm like. I think I'm gonna have to have a separate laptop with me during the stream to join the Zoom call. But they're using Zoom this time for the earnings. So you guys might actually see me on the earnings itself, Tanner and Roy as well. But yeah, I think Hood's going to have a good I don't think we're going to have an earnings where they fall back to 70. So, and if anything, if the market's actually recovering, might be able to ride this back up even higher if they have a decent earnings. But we'll be live 3:30 tomorrow Eastern for the earnings. I'll try to get Sam with me today because he has positions in Amcor and on semiconductor. And those are the two earnings after the bell. Amcor right there up 3.28%. Why is Unity up 10%? Well, okay, so I don't think Unity or Roblox deserve to get hit as bad as they got hit because of the Google Genie thing. People thought Google was going to go after video games, which maybe they are going to go after that. But again, some of these stocks just got destroyed. So I think Unity is just getting a rebound after losing 30% last week. And that feels rather healthy. And that headlines are not as serious for some of these smaller names. ASTS did lose some of the pump. ASTS, yeah, lost most of it. Rocket Lab still holding on to a decent chunk of it. up about 5%. All right, I think that's it for today. I mean, calm, cool, and collected is what we need. Calm, cool, and collected is what we need. And if we see software rebound, then maybe it was a legit deep seek for software, which would be exceptional if that part of the market starts recovering. That's a good chunk of the market that got hit and had a lot of derivative effects all of last week. Dustin, thanks for the super chat. Just want to say thanks for all you do. You become my weekday routine. I've learned a ton since I've started tuning in. Much appreciated. Dustin, thank you for tuning in and being here every day. Really appreciate it. And I know last week was emotional and rough for everybody, including myself, probably a lot of family members, but we're going to get through all this stuff together. And again, I think the most important thing to remember is when big tech is spending $650 billion on Capex, it's very hard to have a bear market. It's hard to be bearish when Trump wants 100,000 on the Dow. It's hard to be bearish when we know rates are coming down. Like, we would have to see some real cracks in the overall bull market thesis, which last week tested certain things by saying Anthropic's going to kill SaaS. But like, that's not a real crack in the thesis. If anything, I think the reason all of us called bullshit is because, like, oh, wait a second, if Anthropic's going to destroy Salesforce, then NVIDIA should be going at $300 because you're going to need a lot of GPUs to destroy Salesforce. It's like, but that wasn't happening because obviously the logical syllogism didn't connect towards the end result of the conclusion of Anthropic destroying SaaS. And so if it didn't connect, aka the bid didn't go to the AI companies, then the thesis probably wasn't even real. Not to say software won't be disrupted, but it probably doesn't deserve that ugly of a decline. Yeah, the market is closed next Monday. It's President's Day. The market is closed next Monday. So yes, the market, we will have a long weekend next week. But this week we got to see if we can recover. What do you think about Microsoft dip? I bought the dip on Microsoft last week. I have not turned it into a real position. I'm still trying to. So I'll be coming out with a Substack on big tech in general soon. I know we haven't posted a couple articles over the past 2 weeks. The meetup kind of got in the way of a lot of posting, but have a couple deep dives I want to get out. I want to have a big tech earnings recap Substack. Hopefully that's out by like tomorrow night. And overall, I want to do a little bit more of a deep dive into the companies that got hit. Microsoft was one of the companies that got hit, and Amazon was one of the companies that got hit. Meta did a round trip, didn't necessarily get hit, but Microsoft and Amazon just got decimated. I think those two deserve a little bit more of a deeper dive into the numbers, at least. I mean, everyone knows those are amazing companies, but the numbers show that the companies really are undervalued at this point. And maybe they should be worth turning into bigger positions. Jason will be on tomorrow. Actually, no, Jason's not going to be on tomorrow because we have Robinhood earnings. I'll ask him if he can make it today. Usually Monday is really tough for him. I'll see if he can. But if not, we are probably going to have to delay Technical Tuesday. Either it's next week or by a couple days. Because of Hood earnings tomorrow. Also, let me put a couple links in the chat. So again, LA meetup that is officially live. I'll put the link right here in the chat. I also posted a lot of pictures on X about the New York meetup. So if you haven't seen those pictures, you can see those on my X. The LA meetup is live March 28th. We'll have more details soon, but everything should be up there. And then the Wall Street Journal thing, let's read that together as well because you can see that, but there are all the pictures on X. People can check that out as well. All right, let's pull that up. Jason should be live today as well. Yeah, let me link Jason's channel. If he can't make it tomorrow, he'll be live probably like, is he scheduled already? Yeah, he's live at 2 o'clock today. Okay, cool. So I'm linking his channel right now. If he can't make it tomorrow or today, then you can ask him a bunch of questions on his stream at 2 p.m. Eastern. And you should be able to get some answers around TA. All right, let's read this Wall Street Journal thing. S&P still moving. Tesla, by the way, also, look at that. Tesla breaking through almost 420 here. Nice to see. Rocket Lab up 5. It's not horrible. It's not horrible. Just got to be calm and collected. Are you in Amcor? Yes, I'm in Amcor. I think earnings will be good. The stock is up about 15% year to date, so I can see the stock getting hit just on numbers that are good but not great. I mean, if they were to take Amazon and Microsoft down 10%, Amcor obviously could be taken down for a variety of reasons. But if it's down 15%, it'll be flat year to date. So the good thing is I think a lot of us got into this thing around 30. Even if you got into the high 30s, you have a bit of margin of safety. But for Amcor, I mean, again, same thing as we talked about last week. If you are uncomfortable about the earnings because every company that's beat on earnings has got hit, then you sell before the earnings, especially if you have a very short-term view on the stock. Amcor is one of those names that should be able to get to $75, $80 over the course of the next 2 years if the American manufacturing theme continues to be intact. And Amcor and Intel are essentially the poster childs of those two themes. So I continue to hold. I will hold if it goes down today. There is a margin of safety, but I do think they should put up some good numbers. It's just, again, every company that's put up good numbers has been punished, including the big tech companies. So that's the difference for today. Now, on semiconductor also, Sam loves this one. They are reaccelerating growth. So I don't own this, but they should be able to put up some good numbers as well. It's just a question of sentiment. But it's a relatively green day. So maybe that helps with sentiment for these earnings as we get into the close. All right, let's read this from the Wall Street Journal. Amit was live streaming his market insights to an audience of day traders. All of you guys are day traders. A couple of months ago when he was caught off guard by a social media post from Trump celebrating stocks all-time highs. The president's message Cook Raja thought didn't add up. The S&P 500 was trying for a record, but not there yet. And the NASDAQ composite was skidding lower with artificial intelligence stocks having a tough day on Wall Street. Cook Raja looked at his screen and shook his head. Wait, one trader typed in the chat, is he talking about the Dow? Why is she calling you traders, bro? That's just like the Dow Jones Industrial Average, the market's throwback benchmark, did indeed touch a new high that day. This past week, it crossed 50,000. We never really talk about the Dow, said Cook Raja, the 28-year-old trader. Dude, I guess I'm a trader now, bro. I'm going to embrace it. I'm a day trader, baby. A 28-year-old trader and content creator who spends almost every day posting about stocks is just not on people's radar. For a new wave of young investors that grew up trading on their smartphones and watching the NASDAQ shoot into the stratosphere, the Dow Jones Group of 30 real economy stocks, other examples include Caterpillar, Home Depot, and Coca-Cola, can sound a little stodgy. Okay, cool. That's the majority of it. Is there any other quotes I have here? No, that's pretty much it. That's pretty much it. I don't think she meant to say trader as in you guys are all trading stock. I think that's just like a colloquial term to talk about people who care about the stock market, like trade. I mean, she could have said investor too, but I don't think it really is that different of a term, or at least that's what she's thinking probably. All right, so that's the article. We made the Wall Street Journal, folks. She wanted to say DGen. Amit and his DGen audience. We're looking at the Dow Jones. All right, cool. Wall Street Journal, baby. I'll put the link in the chat again if anyone wants to. Yeah, trader's not an offensive term or anything. It's just a lot of you guys don't actually trade. But I think she meant traders as in people who are just keeping up with the markets and paying attention to stocks, all that stuff. Bag holders. Oh my gosh. That'd be hilarious. All right, so I think that's pretty much it. Markets are green. We needed a green day, especially after last week. It is still a bull market. The earnings are why it's a bull market. I'm not saying it's a bull market to just say it's a bull market. We looked at the earnings. The earnings have been fantastic across the board. Banks, healthcare, big tech, obviously. That is why it's a bull market. You got rates that will be coming down eventually. And although individual stocks like a HIMSS got hit pretty bad, those stocks going to zero don't really affect the broader market. So although last week a lot of high beta names got flushed out, that's okay. Although it might suck for individual people owning those names, it's not taking down the entire market. And the most important thing is that this market can continue grinding forward. S&P 694.26 on the day. Are we back? I don't know if we're officially back. Definitely feels like we have a chance to be back. But I think let's get a couple more days of holding this momentum and then we hopefully would be back. I think we all struggle. We have PTSD of saying that we're back so far. So we need a couple more days. A couple more days to get there. All right, word of the day. What do we got? Give me a good word of the day. Okay, I think this is reasonable. Not too crazy. Yeah, nice to be able to breathe again. Agreed. Last week, it really didn't feel like we had any room to breathe at all. Recondite. Little known, obscure, or difficult to understand, especially to most people. The strategy sounded recondite at first, but once simplified, it was surprisingly powerful. Great word for ideas that are deep, not just complicated. There's no way I'm saying this name wrong. Recondite. If I'm saying this name wrong, something is wrong with the English language if I'm actually saying this name wrong. Recondite.
Recondite.
Again, I don't know if laughing is even appropriate. Like, this is just stupid. Like genuine. I'm going to make my own language. I will use ChatGPT to create. How does someone get recondite? It's recon. Like, where does the C-O-N look like a K-U-H-N? Like, did anyone actually think it was recondite? Like, be honest. Be honest. Did anyone actually think it was recondite?
Recondite.
Or recondite, whatever. This is so dumb, dude. It's not Rutgers, dude. Can't blame Rutgers for this. This is like the English language at this point. It's French. This is just stupid, dude. You know, the emphasis on the wrong syllable. I live for your word of the day pronunciation. I'm not like trying to get it wrong, dude. I had a streak of like getting 3 right in a row, and then it goes right back down to moving it. You're gaslight. I'm not gaslight. If I could say these words correctly, I would. I really would. Don't worry, Amit. Just make money. Okay, that's a good idea. That's a good idea. Hopefully, we can make some more money this week. All right, so that's it for today. We'll have 2 earnings on the close. It's a bit of a light day, which is really good. We just needed to relax a bit. We'll have earnings coming up. Oh, I did want to play a clip from the podcast. Let's play this clip right here. Some of you guys might have already seen this, but I thought this clip was actually really worthwhile from Josh. And it goes back to this idea of ultimately being more optimistic around markets. So here's Josh of the new podcast, Basis Points. I'll link it in the chat for those that want to watch it. But I thought this part of the conversation was really important because he talked about the lost decade, which some of you guys lived through. Put in the chat if you lived through that. I didn't. At least I wasn't in the stock market when this was happening. And it's kind of unfathomable that could happen again, but it could. And this is where Josh talks about what to do if that does happen.
That in 2010, the 2000s decade was a lost decade for the S&P 500, as you know. But for the audience, if you had bought an S&P index fund on January 1st, 2000 and held it till December 31st, 2009, a full 10 years, your net return was 0.
By the way, I don't think my generation can even factor what that means. I can't understand what that means. 9 years of nothing.
And actually, but it's worse than it sounds. In inflation.
Dude, could you imagine we buy the S&P or Nvidia or anything today and we see nothing for 9 years? Like, I wonder how many of us, including myself, would even care about the markets every day if we go 9 years without nominal gains. Like, I don't think it's possible in this market with all this information and algos and everything going back and forth and retail, but still, that would be crazy to live through. And I have a lot of respect for the people that lived through that from 2000 to 2009.
In adjusted terms, you actually lost money.
Yeah.
So that's number one, because your purchasing power shrank while your money stayed flat. So nominally, you were flat, but in real life, you were down.
You lost money. Yeah.
But it's actually even worse than that. for your trouble, right? You got nothing. And your trouble was two of the most vicious two of the top 10 bear markets of all time happened within 5 years of each other. So from 2000 to October of 2002, almost 2 full years, the market effectively fell straight down.
Yeah.
NASDAQ fell 90%, S&P fell 57%, peak to trough. And not only was there a dot-com bubble blow up, there was 9/11. We had major blue chip companies revealed as accounting frauds. Enron, WorldCom, which had acquired MCI, is the phone company went to zero. I don't even know if people can fathom that. Imagine Verizon
going to zero,
being a fraud and going to zero.
I didn't know that. I didn't know in the dot-com bubble the phone company went to zero. Like, I could not imagine Verizon or AT&T being a fraud and going to zero.
People's portfolio, the most conservative, like just plain vanilla S&P 500, they wrote it down almost 60%. Okay. So you have that trauma, then it comes back and your housing price goes up and you start to feel rich again. And then 5 years later, it's 2008. And once again, 50% haircut in the S&P 500. Some of the biggest publicly traded companies in the world go to zero. Lehman Brothers, Bear Stearns, these things disappear overnight. One day, this is a blue chip company with 1 million employees. The next day, it's zero. So and AIG, and there's a whole list, and you guys know the names. But so then you recover from that. You get to the end of the decade. You just endured 2 50% stock market crashes, and to show for it, you have nothing. No gain. You just lived through 2 of the worst market events ever within 5 years of each other. And in a 10-year span, the S&P 500 has gained zero.
And the crazy thing is everybody thought Liberation Day was some meteoric event.
Well, so those are, 21-year-olds that they don't have that life experience yet. That's okay.
Yep.
They'll get their own crash sooner or later.
I'm surprised about the amount of leverage I see people talking about. I feel like there's so much leverage in the market today. It scares me.
So we call that tuition.
That's a good way of putting it.
So the next market correction, they'll get wiped out and they will have paid their tuition to the School of Hard Knocks. And that's how you learn. And fortunately, they're doing it young before there's real money involved. It'll suck. But like, how else do you learn? Nobody learns anything from books. I could stack up the 10 best books ever written about investing. You won't change a single thing until you actually live through the ups, the downs, the recoveries. You kind of have to, and that's why the work that you do with the young audience is so important, because they're investing.
Yeah.
And they might not even realize the lessons they're learning as things go on. So having a mentor like yourself that's telling them, here's what we just learned together.
Yeah.
It's huge. Otherwise, you're just going through life and you're not even cataloging these experiences as they happen. It's almost like it's random. No, this isn't random. What we just experienced, here's why it matters. Here's what you should take away from it. Like, I feel like I did that for my audience, and you're doing that for your audience, and it's essential.
And I think the reason people resonate with it is because I'm learning with them. So I'm having the humility to be like, I don't know why the hell silver is at $94 an ounce, but I can research it and I can use my communication skills to help other people understand and then kind of take a position or not take a position. But I think the necessity to learn and actually try to catalog these experiences, it matters. I blew up my first account out of college, 25 grand. I put it into a biotech.
Me too.
Yeah. Well, I had a biotech. I thought they were going to cure every disease. And then they did a reverse split. I was like, oh, that's a little weird. Then they did a second one. I was like, oh, this doesn't. And then the account
reverse split, never a good sign. I took my bar mitzvah money when I was first learning about stocks, and I put it into all these .com IPOs.
Yeah.
I think eToys I lost. I think I had turned like $14,000 into $40,000.
Oh, you must have felt on top.
And
of the
then
world.
it went to zero.
Yeah. Then you fell on the bottom of the world.
I was using margin, and I was buying like .com IPOs, and I thought I knew what I was doing. And then the market said, "No, you don't." But like, I feel like that was valuable. That was my tuition.
So this podcast has been about your life. We have 5 minutes left. In 5 minutes, what are you thinking about 2026 in the markets?
So I don't really have like price targets for the end of the year or forecasts.
Are you bullish, bearish in general?
I'm always bullish.
Thank you.
Do you get upset if people call you a perma bull?
I mean, then kiss my ass. I've been a perma bull since.
God, who does he sound like when I say I don't care?
I've been a perma bull since. Listen to me. Where's my camera? Right here.
This one.
I've been a perma bull since the Dow Jones was literally breaking 10,000 for the first time.
Now we're about to do 50. You know?
And they said it was a bubble then, and it was.
And they're still going to keep saying it's a bubble.
And this is maybe a bubble now. And you know what? I'm 48 years old. Even with my own money, I'm still putting money into a 401k every year, and I'm forced to for the next 20 years. So I'm a forced buyer. Your whole audience, they're all forced buyers.
All of us.
Forced. You have no choice. You will, every 2 weeks, a portion of your portfolio will be diverted directly into the stock market, and you can't pull it out. So if you already know that your next 40 years, you're a forced buyer of stocks, wouldn't you want the market to fall? Why are you rooting for all-time highs to bail out your boomer grandparents? It makes no sense to me why young people are rooting for new highs. The worst thing for you is Dow 50,000.
So it's a fair point, but during Liberation Day, and Steve and I, we know because of our audience, people are like crying, like it's bad. But they're like 30 years old. How do you explain to someone
Keep
that's
buying,
not forced?
shut up, stop tweeting, keep investing. That lost decade concept I just described to you, that's my actual lived experience. If it happens again and somebody spends that 10-year period of time doing nothing but adding to the market, once the market breaks out of that and goes, they will have so much more money as a result than they would if they're just buying at highs and then the market falls and they stop allocating. Disaster. The lower the market goes, the more you should be buying. Don't buy with money that is on margin or borrowed, and don't buy with money that you need to buy groceries.
Right.
We're talking about retirement investing.
So there you go. Well, that was Mr. Josh Brown. Again, I'll link the pod in the chat. I thought it was really, really an insightful episode. And the 40 minutes before that part where he talked about, his life story, how he got to these levels, I thought it was really important. So if you guys want to check it out, you can listen to it there. And, he was a really good first guest to kick off Basis Points. Hopefully we can continue expanding the clientele on guests. I think this week's episode people will like as well. And yeah, we'll keep going from there. But I think the takeaway from what he said is that you can either have a pessimistic view on the world or an optimistic view on the world. It's that simple. And the level of pessimism that is needed when analyzing the equity markets is healthy and important, because you need to be skeptical of a lot of things that happen, right? That's how you find out not to invest in scams and stuff like that. But there's also a level of optimism that is needed in general to be an investor. Like literally being an investor is being an optimist about the world. And so there are many things to be optimistic around when it comes to AI and the state of technology and the earnings growth that we're seeing. But if we were to have that quote unquote lost decade, which I think it would be unlikely for it to happen again, but Amazon has been kind of a lost 5 years. I mean, Amazon's up 20% in 5 years, the Nasdaq's up double. So the question becomes, if you've accumulated a massive Amazon position, the best thing to do, as Josh says, is shut up and keep buying, especially if you believe that eventually the optimism of these markets will play out and these names will continue to do very well long term. So that's what we got. Thank you, everybody, for being here. Thank you for watching. Thanks for the good feedback on the name. I didn't know how many people would like the name or not, but it seemed like a decent chunk of people enjoyed the name. So I like it. Basis Points, obviously a financial term. I think it fits well, and hopefully we can get a lot more people to be on the pod. All right, that's it for me. Thank you, everybody. I'll see you guys on the market close. I'll see if we can get Sam on semiconductor and Amcor earnings today. And then tomorrow we got the big one with Hood. And we'll keep going from there. Thank you, everybody. Appreciate it. I'll see you guys on the market close. Bye, everybody.